that tells both the operators and the public that what a microfinance bank is meant to do is to give money out. In fact, over the years, each time I interview people, and I normally ask a question, what do you think we do? Up to 50% of the people will tell me that we are helping the poor. The rest, maybe another 40 will tell me that we give money to the needy. Now, I also bring the question home. I ask some of our officers, people that have worked with us for some years, from time to time, let's remind ourselves, what do we do? They say we give money to the to the needy. We help people. Yes, it's part of what we do. Now you see, that is actually one side of the story. Everything that we do takes money, and that money must come from somewhere. So people forget, and then a lot of us as leaders, there's this presumption that, oh, if I have a license from CBN, then I will be able to raise deposit that will be financing whatever I want to finance. We can also say that over the years, it doesn't work that way. In fact, that you are regulated, that you have license, is first of all a cost. So, we have discovered that there is a need for us as players to find innovative ways of leveraging to be able to build and grow our business. The other point I want to conclude with is that the way this sector is going, you cannot afford to remain small for a long time. You just have to grow. Because if you look at what is happening, there's likely not going to be space for small players in the next few years. Maybe some of us would have observed that attention is even shifting to our colleagues who are fintechs, who have come to the sector. Attention is shifting to them than the people who have been there for 15, for 20 years. Why? Because it is believed that these people, they are the size of business that they are running. The size is big. The activities are deep and wide. So the point is that we all need to innovatively find a way to be able to drive funding for our business. And we have gotten the right partners to be able to help, not only to open our eyes to the opportunities, but also to be able to provide the needed support that we require. Let me also say that the needed support is not government support, it is business. Okay? They will provide value and then they will get paid. I think I'm right, United Capital. They will provide value and they will get paid. It's not NGO. So, but I can tell you, from what I know, and a few of our colleagues who have actually done things along that line, I can tell you is something that is worthwhile. So I want to encourage each and every one of us to please give maximum attention. And if you can observe, we are trying to keep to time. We will keep to time, and at the end of the day, we will all be happy we are here. Let me also invite some of our people that are on the way to please be fast so that they will not miss too much. Thank you.
Thank you very much, Mr. Chairman. And I want to say thank you to United Capital for partnering with the association to take all of us to the next level. And right about now, we would be listening to the economic outlook for 2026, and this economic outlook is specifically, tailored to how, the outlook of 2026 will be affecting the microfinance bank sector. And to take us in that economic outlook is Mr. Ayodele Akinwumi, the Chief Economist, United Capital Group. Ayodele Akinwumi is a seasoned economist and investment professional with over 25 years of experience in economic research, investment strategy, and corporate banking. He has led teams responsible for macroeconomic sector and corporate banking. He has led teams responsible for macroeconomic sector, fixed income, and equity research that support investment and contributes meaningfully to public discourse and policy decisions. He previously held senior roles at FSDH Merchant Bank, where he also contributed to corporate banking and structured financing solutions to large corporates. His work reflects a strong blend of analytical insights, market knowledge, and practical financial advisory experience. He is our very own oracle. Please welcome Mr. Ayodele Akinwumi.
Thank you very much, moderator. Good morning, distinguished leaders. And it's my great pleasure to be here this morning to share with you my insights on what's going on in the economy and as it relates to your business. Thank you very much for the organizers and thank you for the partners. It's like the chairman had seen my presentation slide when he, thank you very much, sir, for the good work you are doing, when he was making comments about where the industry is going into as regards what we'll expect, and then the fact that it's not going to be small players in the industry. So what I'm going to do this morning is just to quickly share my views and then create time for discussion. I understand that I will run through the presentation, and then thereafter there will be question and answer. Okay, so this is what has happened to our foreign currency, for our exchange rates in the last few years. And I've picked the 2028 because there was an opportunity for you to review. The central bank usually review things and say, we are going to do X and Y to the industry. So there was recapitalization exercise for you, 2020, and then shifted to 2021 and 2022 for you to meet the capital base. So exchange rate was 364 naira to $1 in 2028 December. I picked the last figure, this presentation. And as at September 2025, it was 1,475. And I picked that figure for a purpose, as you're going to see very shortly. The last year, today, things have improved better than what we had on that screen. Because the industry data that Central Bank provides, hence the last one ends at September 2025. So if you look at the approximates, if you assume that prices of things moved with that exchange rate, you will say that prices has moved by times 4.05 on the approximate within that period. And I'll bring it home and I will share a personal experience in my prayer life. So if your clients, your customers, and most of you finance, because of the network of business you do, you finance retailers, you finance wholesalers. So I used to support a very large manufacturer of CSD, carbonated soft drink in Nigeria. They have distributors and they have retailers that retail their products. So at a point, I worked in a relatively very good bank, but smaller bank. So devaluation happened. The cost of raw materials skyrocketed, and therefore I have credit line for them. But their working capital increased by that devaluation rates, just like this. And like you are aware, there is a single obligor limit, both per obligor and per sector. So I couldn't do much with this organization. All of a sudden, what they needed to run the same level of production went up by more than ×5. And I couldn't go back to my board to say they should give me money like that because I had not increased my shareholders' fund that will enable me to do that. So they loved me because I usually create values for them. You know, we put God with them with solutions. But business moved a little bit away from me because I couldn't meet their needs again, given my single obligor limits. You also do business with their distributors. So you may not be able to buy your business, you may not be able to finance those large corporates, but you do business with their distributors who also require higher working capital to maintain the same level of business. And so you will now realize that no matter the affinity that you have with them, business will naturally move away from you to another organization that has capacity to meet their needs. So when people say, oh, why are we using exchange rates? Why are we using Naira? We are doing, dollar, we are using Naira. But by the working capital requirement, the inputs, most of them are in dollars. And this is how Central Bank looks at your business, and not only your business, our business, the business of financial industry, where you intermediate, to say, for you to support the business you are supporting, you need capital that is commensurate with the kind of business that's going on. That's number one. So here, we title this regulatory requirements or in your best interest. Because either you like it or not, the businesses of your clients are moving. And I'm going to show very shortly the new tax law in town, which specifically supports these business segments that you support. I got my salary in January. My salary came down a little bit. No, not a little bit, a lot. Yes, and I was talking to some people in our church, and they said, oh, they had a raise. So people who earn a little bit lower, and that was the intention. People who earn a little bit lower, they need to have some supports. And I'm sure all of you here, all the leaders, all the MDs, your salary also came down because of the tax. But the business segments that you are supporting, based either retail, individual, or corporates, they are saying their tax will be reduced. For the corporates, they're not going to pay any tax at all. That's business expansion for you. And the question is, are you then adequately capitalized to support that expected massive expansion in your business? How do you know the other side to it is the fact that banks have been asked to raise additional capital, and they have done that. And they are looking for where to deploy the capital. Very shortly, they will encroach in your business space. In fact, with technology, they can do it better than you. So we need to begin to think either the central bank will come up to you to say there is another round of capital injection that you need to put to your business, or necessity. I'm not sure if it's going to be a survivor issue. Like I said, that the chairman had, as if he looked at my presentation. So it's a survivor strategy you need to think about. Now, Nigerian economy is expanding. It's now very attractive to a lot of people, to foreign investors. Just look at what's happening in the stock market today. Look at foreign inflows into this country. Look at commitment by Shell, by all of those people. Same with your market segments. Strong opportunities in this place. So foreign microfinance banks are coming. Either you like it or not, they will come. But you have local knowledge and global expertise to ensure that you brace up, to quickly maintain the market segment that you have. Now, I will go back into this. This is industry data. This is the last data that we have from Central Bank, and that was why we picked the figure, the revaluation, the exchange rate for September. So if you look at the asset growth and the loans and all of those things that you have, and I would just want to draw your attention to share of equity in dollars. So the loans in Naira asset has grown between 2012 and 20, between this period and here by 1,200. But look at the growth in your shareholders fund, 21%. Is that big? Is that good or bad? Perhaps not too good. And remember, there's a limit to how you can finance businesses if you don't have strong capital. I also was managing a large corporate before I joined UCAP. So I had exposure to another sister company. Of course, you know the group structure whereby you say single obligor limit by related company. And so I had dollar facilities for a sister company within the group that was doing well, one of the biggest in Nigeria today. So what happened, so the other ones that is established, that one is more like a new company, so devaluation happened. The Naira value of my loan for them went up by more than ×5 because of devaluation. So another arm of the business is generating a lot of cash flows, now required me to give him some loans. When we initiated the dollar loan for the sister company, exchange rate was around that level, 300. But now we're now doing 1,700. So without giving additional loan, the loan went up by more than ×5. So I exceeded my single obligor limits for even individual, not even for group, for that obligor. And all banks in Nigeria who had that transactions, they said the same thing. So we had to write to Central Bank to give us a forbearance. The other company that generating cash flow asked me to give me just 2 billion OD. And I said, I'm sorry, I can't do that. The man says, I said, but you know that I have facilities for this, your sister company, but I am the group treasurer of this company. I'm not responsible for that one. He said, I will mention the name. Okay. He said, Bank A, give me about 170 billion OD. I said, you know that Bank A that you are talking about is more than ×10 my size. So, I'm sorry, Ayo. Business moved away from me to Bank A, who happened to be Zenith Bank. And I couldn't do much because I had exposure. Same is happening to you. So this is, you can see that you have not grown so much in dollar terms. And therefore, to capture the opportunities that we are seeing in this industry, it is a matter of survival. And I'm glad that I'm talking to the business leaders, perhaps the owners or the owner managers here. So you need, without Central Bank asking you to go and do this, market is saying you need additional capital to run the business. And I remember around the first major recapitalization in early 2003, in Nigerian banking system. Solido was the Professor Solido worked with President Obasanjo as economic advisor. He did a neat document, National Economic Empowerment document thereabouts. And in the document, they said there was a need for them to recapitalize banks. And I think some few banks read the documents, they acted on it. So when the Solido now became central bank governor, the first thing he announced was recapitalization for Nigerian banks. And if you can remember very well then, GTB and Zenith banks were the first bank that entered the market to raise capital. And I think Zenith Bank raised at 1090, GTB 1060. And they had that first mover advantage. You need to start preparation now for another round of capital. If the regulator says you should do that or not to survive with your business. So this is just the thing. So this is what you had in 2008, 2018, and 2025, September. That's your value in your shareholders fund in dollar terms, so it hasn't grown much. Okay, so this is your regulatory environment. I'm aware that you are very familiar with this. National banks was asked in 2021, of course, because of COVID, they moved it a little bit to 3.5 billion to 5 billion. States, 500 to 1 billion, tier 1, tier 2, like that. The next question is, how much do you think, if they are going to announce another one, how much do you think they are going to announce for each of them? Question mark. If I were you, I would be looking at this multiple. Times 4. Why is it not moving? I'll be looking at this multiple. Sorry. So I'll be looking at that multiple of times 4. Now, for you to scale, if you are operating at tier 1, you need to think about tier 2, states, and then perhaps national. The events that will happen will naturally make some. And if you think that you can't raise it, perhaps it's time for you to have discussions among yourselves and to look at partners to merge with. But this will happen. So these are part of the things. We just brought all these areas, but MFB, you need to maintain a ratio of 1 to 10. And if you look at the that table that I showed earlier, this is the maximum loan you can actually take, given what we did here was that we used today's capital adequacy ratio and the ratio, and we multiply that shareholders fund by 10, and we got all those numbers. And of course, you know that you can't even give all your loans in this. It is a maximum. That's what regulation is saying. So you can see if you are taking this loan, are you still going to be very profitable with the capital in the industry? And as we're going to see very shortly, interest rate environment this year is going to go down. So if interest rate environment is going to go down, and then it means that the kind of loans that you charge, the interest you charge now may go down. Yes, it's double-edged sword. As you are lowering your lending cost, you are also lowering your deposit rates, your deposit cost. But then, because Microfinance Bank with the comparables in commercial banks, you will need to pay a little bit higher because of the risks perception to attract the kind of liability you want to attract. And therefore, the margin may be squeezed. And so you need volume to drive the kind of profitability that you want to drive. Next slide, please. Okay, so one of the things that the slide before this. Okay, so one of the things that I want to show up here is that you have investment regulation from Central Bank. You are allowed to invest in equities. 7.5% of your shareholders funds. You can also do some deposits in treasury bills. You can do, in placements, 15% of your deposit liabilities. I also put those things there. We put those things there to show that there are opportunities for you. Sometimes at association level, you may need to go to central bank. I'm not sure whether they allow you to place money with, mutual funds, money market funds as liquid assets, because the rates they have in those areas are higher. You may need to, parley with them, and you can liquidate within 24 hours to say, they should allow you to do some of those things from association level. As you are doing that, you are getting a little bit higher income from what deposit that you are having. This is a typical, we brought this one also to show you something. Some of you may be aware of this. This is a public information, and to say that the way central bank look at the ongoing recapitalization with banks is different from the way they had looked at it before. So look at this bank. This is a merchant bank, and the account, this is a real bank, so it's not a fictitious account. This bank had, as at 2024, they had 35 billion shareholders fund. Central bank came to say, a merchant bank, you need to come out with 50 billion. Now, however, these banks naturally should be looking for about 15 billion or 14 point something billion to make up. But central bank said, no. Out of all the shareholders fund that you have, I'm stripping off almost 33 billion. It is only 2 billion that is qualified for what I'm asking you to do. So what then means is that they now went to go and look for almost 47 billion to meet up the requirements. And that is the thing that may likely happen in your industry. Okay? So what some of them were doing, really? Allow us, we have accumulated reserves that are as big as 19 billion. They say, no, you can't use that reserve. You have to bring in fresh capital. What happened to you if they ask you to bring in fresh capital into your business? Are you prepared to ensure that you are able to raise additional funds into this business? Because same may likely happen to you. Now, these are the direction we think you need to follow. It is no longer an option for you to ensure that you digitize, you leverage technology to drive your business. If you look at what's happening to OPay, what's happening, what Money Points and all of those fintech-enabled banks are doing, they are even threats to the conventional merchant banks and even commercial banks. So you need to ensure that you leverage technology. As you are doing that, you are able to service your customers better, stronger, and more efficiently in a cost-efficient manner. So if your business does not really use technology, you need to think twice and ensure that you do that. You'll be able to deliver to them, credits, all of those environment that you're going to be able to do. So please ensure that you do that. Partnership, this type that we're having here, with government, with various stakeholders, with market operators to ensure that we are able to do that. Now, these are also things, because as you are thinking about market, and I'm going to show you data very shortly, to say that the market is also is there for you. But these are a few things that you need to have at the back of your mind, that you need to increase your corporate governance and risk management framework for you to assess the capital market to raise funds. Some of these, for you to raise, I think about 3 or 4 microfinance banks have come to the market to raise bonds or to raise CPs. And, but you need to strengthen corporate governance and risk management framework to ensure that to enable you to do that. You will need, credit ratings to do that. So if you are not there, and of course we'll be willing to hold you to ensure that you are able to do this. Like I mentioned, it's no longer an option for you to engage in, digital transformation to scale your business. These are the opportunities in the capital market for you to ensure that you are able to raise the funds. And look at the amount of money that banks raised. They've also introduced the same thing in financial insurance. But the market has been able to support them to raise the kind of funds to raise through all these means, debt capital markets, because your qualified capital, you can have tier 2, which is predominantly subordinated bonds that you can have. So you have commercial paper, medium-term notes, corporate bonds for tier 2, right issue, private placements. But you have a partner here who can support you and ensure that you get these ones done. So I'm going to talk about tax. I've entered it earlier. This is a tax structure. And how does it impact your business? People at that level who you are doing business with, they are exempted from payment of tax. That's more disposable income for them, which can enable them service the loan you are giving to them to do the things they need. Salary advance, they are now able to pay it faster without so much defaults. The companies that use SMEs and the micro businesses that you are supporting, they are not, as long as they have a turnover of less than 100 million and then asset of 250 million, they are exempted from the payment of taxes. And therefore, that's an expansion for them. And we are also willing to work with you because as some of them are growing, what will happen is that they may want to even have, related companies that they can run. Oh, if my turnover is going to go beyond 200, rather than for me to pay tax, can I incorporate another 2 or 3 companies related to be doing something similar? So, and therefore, these are the opportunities in your industry. And therefore, the capital requirement, the loan requirements that industry will provide very shortly will be very immense. So you need to be geared towards ensuring that you are able to support, to meet them. And that's just what we said in this place. So here, I'm going to quickly go through what happened in the market last year. Equities market, Nigerian, among all the companies that we recorded, one of the best in the world, surpassing S&P 500, Dow Jones, and all of these developed markets. This is a good story to tell. And what this means, for what is happening now, at least as of yesterday, it has also reached, attained over 20% year to date. So the market is big, is strong to support your capital raise. But there are things you need to do to ensure that you are qualified to access the market. Now, this is the growth in the market in the last, almost in the last 10 years. It's been excellent. Our projection this year is that we are going to have something like about 31%, but that's conservative. This is the bond market also. Now, the yield has dropped, but if you look at it with the remaining part of the world, you will say that it's attractive. And if you look at the current tax law, they are saying that any tax on corporate bonds is exempted. Sorry, this is not exempted, but then it's still attractive. It is federal government bond that is exempted, but you can access the market to raise funds for your tier 2 capital, which will qualify as part of your capital adequacy for you. I will rush through this. This is the growth in the economy. You say expansion. So when we say GDP growth rate, what we mean is that if you look at it from the elementary economics, factors of production, activities are expanding. It's expanding faster than it had happened in the last 2 years. And it's also expected to accelerate further this year. So more raw materials will be required to produce. More labor will be required to produce those things. More machine will be required. Everything will be required. And when those things are employed, they will need working capital to bring them to the customers. More employees are going to be, more people are going to be employed, which is a target market for you. So things are expanding. But what is also very important for you is that in which sectors of the economy are we going to have those expansion? Now, and the way you look at this is look at those sectors and look at the companies within those sectors that are growing and they are also large. And then you look at their value chain. The companies that you are supposed to sell, the retailers, the logistics, the wholesalers who you can lend money to. So you look at financial, you look at trades, which is a lot of activities there. You look at livestock, you look at construction, you look at telecoms, you look at crop production, agri, and you need to go after the value chain to say that you have their suppliers, the people who are doing business in that area. Now, these are the sectors that we brought down. Say manufacturing, these are the growth sectors of the economy. And if you look at what's going on in real estate today, you will say that if you have clients who are retailing cements, they will need more money because there is more demand for them, for their products. So you need to ensure that you position yourself very well, you know what's going on, what are the driving sectors, and who are you going to relate with there. We're going to share the slides with you maybe later this evening. So now again, look at key prices in the economy. Inflation rates has been dropping. Yesterday they released the figure for the month of January, 15.01, which is a little bit lower than what released in December. Now, this is also an important variable that central bank uses to administer interest rates. Like I mentioned earlier, interest rate is expected to drop this year. The risk in the economy is dropping, growth is expanding, and when you have this, exchange rate is stable and appreciating. In fact, we have clients now, friends who are calling to say, oh, what can I do with the dollar I have? And I said, better go and sell it. Because if you don't sell it, if you invest it in dollar funds, yes, we have dollar fund for you. But then, because of the level of depreciation that is happening to Naira against dollar, you can sell the dollar, invest in Naira, either corporate bonds or treasury bills, 1 year later, and you buy it back again. Yeah? So, and as those things, key variables are improving, then the risk in the economy is dropping, and therefore interest rates, which is also part of the risk that you have, is going to be dropping. So those are the things that are happening in the economy, which points to the fact that we are moving in the right direction. Oil price, this was the forecast last year. However, geopolitical tension, Iran, escalation, a lot of those things has made it to go up a little bit. But that's where it is. Now, what is the outlook? I've mentioned this, lower interest rates that you expect this year, and that is a margin contraction for you. And therefore, if your pricing is going to drop, you need to leverage technology, as I mentioned earlier, to ensure that you also lower your cost of funds. And one thing about technology is that once your customer realizes that they are able to access their fund with you at any point in time, the retention of such funds with you increases. That means you have access to lower, cheaper funding, right? And number two is the fact that they can also allow you to reach wider clients, wider customers cheaper. And you can also service a whole lot of people, mobilize funds, which means that your liability comes cheaper. And even when you are given the same level of asset creation, you are fine. Then you need to, if interest is dropping again, you need to also grow your assets to enable you to remain profitable. Right. Now, I've mentioned oil price, tax reform, I've discussed that. Insurance, I've discussed that. Banking, I've discussed that. Banking, what is going on is that they want to deploy those capital. Deploying the capital requires that they will come to your market, deliver technology to take your customers away. And so you have to be very intentional, and you have to be very, very ready to take advantage of that. Then the development in the capital market, which is quite supportive, and then moving forward. This probably just the rates that if you need them for your strategy session, that you can use to model your financial performance. These are the risks in the economy, and what we have done here is the mitigating factors and how to ensure that you manage those risks properly from your business. And this, I want to thank my colleague is here, Dr. Doris, who also helped to put this together. So thank you. I'm told I have just a few minutes, and I hope I'll be able to add value within a short period of time. So we take questions, and then we're also available outside, even beyond now. Thank you.
So thank you very much, Mr. Jodele. I saw the level of engagement in the room, and I think I would also mention that these slides will be made available to everyone whose email addresses, who registered with their email addresses. So if you did not register with your email address, please make good time to go outside at the desk to register, and so that we can share the slides with you before the end of the event. All right, so we have only Mr. Ayodele has spent over 35 minutes, so we'll only take questions for 5 minutes, or we want to wait till after the panel session before we take all the questions. Okay, so let's take questions. Maybe we'll just take 2 questions, and we take it up from there. Okay, so permit me to bring forward the pioneer chairman of the association, our chairman emeritus, Dr. Valentine. Please make your way to the front. Yes, please. That's the chairman emeritus, the first ever chairman of the association. Thank you. Yeah. All right. Okay, questions, please. Yes, somebody raised his hand at the back.
Good morning.
Good morning.
Yeah. Thank you for that wonderful presentation. So I just want to ask one question. You mentioned, some options that can be explored in terms of getting capitals for our business. So one of the options you mentioned is going to stock exchange market to raise capital. Okay, so I'm aware there are minimum expectation in terms of what your balance sheet size must be before you are qualified. So if you have a bank and you have not met that requirement, what roadmap or what advice can you suggest? Secondly, can you please help us to touch more light on what are the minimum expectations that you have to achieve in terms of asset size before you can qualify to be listed on a stock exchange? Thank you very much.
All right, Mr. Adeomi will take all the questions, then he would answer them at once. Okay, so the MD of NPF wants to ask a question.
Yeah. Thank you, sir. My name is Habib A. Yusuf from NPF Microfinance Bank. Sir, when you were making your presentation, you alluded to the fact that exchange rates, and we are also aware that exchange rates has been dropping, appreciating. The naira has been appreciating against the dollar. Inflation has also been dropping, but interest rates, especially in relation to the NPR, still remain high at 27. Please, in your opinion, what do you think this portrays to the economy? Thank you.
All right, thank you, sir. The last question for this session. Women in the house, please ask questions. Yeah, we are an inclusive organization. All right, so thank you.
Good morning. My name is Fumi Ayola. I work with Maiden Microfinance Bank. So my question is, in today's terms, we talk about collaboration being the new competition. And from your discussion, it's obvious that we may need to collaborate to scale, right? What kind of advice would you be giving? Because I also realize that as Nigerians, we're used to doing my own thing. So which way do you think we can go forward in collaborating so that we can scale? Thank you.
Thank you very much. You have the floor, sir.
Okay, thank you very much. So in terms of, thank you for everyone that asked question. In terms of the specific requirements that you need to have to access the market in any of these markets, I listed some of them there, and some of the assets. I'm not sure there is anything about the asset size you need to have to actually assess the market. But what I think we can do is that I have the MD of our investment banking here. So we have started a relationship with you, a partnership. So you can speak to us, and then we'll give you details of some of these things. So the intention of this is to just tell you the things and a high-level conversation you need to be having to ensure that you drive your business. So in terms of the details about, because I can't exhaust them here. So there, I think one or two Microfinance bank is listed. So I think your Microfinance bank is listed here. So on the stock exchange, and it's been doing well since then. But what I just tried to do is to say there are funding options that can help you to scale your business, and I brought them here in terms of the details of each of the requirements. Some of them, when you realize that you are not even qualified, then how do you start the process of, you tick the button, so we give you the checklist, and then you begin to plan on how you can meet some of those requirements. And perhaps the woman that has the last question about the kind of collaboration, it could also be that you think about the fact that you may not be able to embark on this journey alone. Let's merge. And you will discuss the terms of that merger. Because, and sometimes it may be better for you. You may even be big and you feel, oh, can I acquire some? So it may come from, targeting the companies that you can acquire. And you speak to us, we'll help you to do all the due diligence, we'll help you to do all the models, and we advise you on that. That's one of the business that we do here. So those are the kind of things that you need to continue to think about and see how you can, because people, any operator in this market who refuse to scale will not be able to survive, like we have shown. And if the conversations don't start earlier, you may then be in the desperate level to survive, and then you may be taken over very cheaply. That's why it's good for us to understand where the economy is going and what the regulators may do very shortly. And even if you don't, as I said, that is it by regulatory or in your own best interest. So you can start the conversation here and now and have a roadmap on the kind of things you need to do. The collaboration could also be, and I like the fact that you have an association, and I showed you some investment vehicles that you are allowed to do by regulation. But you can engage the regulator to say, can you please tweak this? Similar to what the Bankers Committee does to Central Bank. And then, because you are coming as an association, you have a stronger bargaining power than coming as an institution, an individual institution, to engage the Central Bank to say, oh, rather than placing my money with so where this instrument where I get 5%, these other instruments, A-rated institution, can I place, and they are investing in federal government bonds. The funds is well secured, has a custodian, and meet all the requirements. If I need liquidity issue at a particular time within 24 hours, I can access my fund. Can you allow me to place my fund that you have allowed me to do? And also not only placing that fund, that you also speak to them to allow that fund to qualify for your liquidity requirement calculation. So two things. So when they are asking you whether you meet the liquidity requirements, which I think is about 20% now, then you ask them that this instrument I'm placing in, some that invest in federal government bonds or federal government treasury bill, should be added to that liquidity computation, maybe with a little, haircut. So these are kind of collaboration that you should be having. And then also, you have come together like this to, I'm sure you are spending some money here, we are also spending some money to host these events. Now, to also enlighten, I think it's in the presentation, to enlighten the investing public, to ensure that your market segment is protected and no policy that will bring about adverse development in your system is allowed to start. So those are the kind of collaboration that you need to engage in that will ensure that your business scales. So the last question about, maybe second question that you asked about the MPR. If you look at what Central Bank did last year, so there are a lot of things that they look at to administer monetary policy, which is geared towards regulating money supply in the system, either to increase money supply to stimulate growth or to reduce it in such that it will tame inflation, because high inflationary environment does not encourage growth also. Is that today, money growth, the growth in money supply is still very high. And if you look at our elementary economics, you will say that increase in money without a corresponding increase in economic activity, output, will lead to inflation. So Central Bank also has the responsibility to regulate the amount of money in the system, in circulation, that will not be inflationary. However, this time last year, if you look at where Treasury bill yields was, about 25-26%. Today is sub 20. Rates have come down. A CP opened yesterday, VFD. I think they are doing about maybe 20. What's the rates? 23. This time last year, when they were in the market, they were doing close to 30%. So rates have actually come down. And if you look at what they did last year, they adjusted their symmetric corridor such that the amounts that you can borrow from them has reduced. That is monetary policy easing. Also, I tell you, the amount of money you can place with them has also reduced. That is still monetary policy easing. And therefore, they can now circulate the money within the economy. But then, and I tell people, the transformation that is going on in the economy is mind-blowing. If the government says that they want to link the entire country through road, moving from Lagos to Calabar, forget about the politics around it. And what I think we need to be doing as business leaders is that when government says something, leave the noises and then think about how will they impact your business and take position. They are building road from Lagos to Calabar, Calabar to Maiduguri, Maiduguri to Sokoto, Sokoto down to Badagry. They are linking the country. They are saying they want to they are coming up with products that will make housing affordable. Now in Nigeria today, we have 12% interest rates on mortgage. That will stimulate demand for artisans, stimulate demand for building materials, stimulate demand for professionals and all of them. And then are you situating your business within that area to tap those opportunities? So Central Bank has reduced interest rate actually, but then they are still careful not to reduce it so much because of the growth in money supply. And as economic activities are going up in those areas, banks are financing those things. They are financing agriculture. They are coming up with rules to say that you cannot export raw materials, add value to it in this place. That will require working capital. That will require loans from you. And so that money that is in the system is channeled to productive activity. So gradually they will ease. So really, interest rate has come down significantly, and between last year and now, but MPR is still at 20% to say, don't just 27%. Our view this year is that they will lower it to 24%. All right? And don't forget also, last year they said they are sterilizing government funds. So they introduced something to it to say government funds, which sometimes could be non-productive, if they are in the bank, they took it away. They may take it to 100% this year, but Essentially, they have lowered interest rate. See the impact in the market. Thank you very much.
Thank you very much, Mr. Ayodele Akinwumi. Thank you so much. All right, so to further speak to some of the issues or questions or concerns that have been raised, and to help us understand how United Capital Group PLC would be addressing, some of the concerns and initiatives that Mr. Ayodele has shared with us, I'd like to bring up stage the the representative of United Capital that will be speaking to, the offerings that United Capital has to help us address some of these issues. And no other person than Dr. Odiri Ogini, CFA DBA, the Managing Director, Chief Executive Officer, United Capital Asset Management. And Dr. Odiri is the Managing Director, Chief Executive Officer, United Capital Asset Management, with over 20 years of experience in financial services, spanning portfolio management, finance strategy, and investor relations. She has held several senior leadership roles within United Capital PLC, contributing significantly to business growth and financial governance. She is a CFA holder, a chartered accountant, and holds a doctor in business administration with a strong background in audit, investment analysis, and corporate finance. She is widely recognized for her leadership and how she combines analytical depth with strategic execution across asset management operations. Under her watch, United Capital Asset Management rise to become a top 3 fund manager in Nigeria asset management landscape, as she continues to grow day by day. Please welcome to the stage Dr. Odiri Ogini.
Good morning, ladies and gentlemen. Are we tired? Okay, because that's just the appetizer. We're just starting out. Hopefully we'll keep to time. All right, so please permit me to stand on the existing protocols that have been established. My job here is to speak to what we do in United Capital and how we can be a better partner for you. I'm not here to sell product. Yes. I'm not here to sell product. They say feel free to sell. Yeah. So I'm here really around, just having conversation. Some of you know United Capital from UBA Capital. Some people still call us UBA Capital. But I think, as we go through our history, our journey, our story, you can see how we have evolved from UBA Capital to United Capital, and we're also here to help you do what Professor Akinwumi has said. How do you access smarter capital? How do you strengthen your governance? And how do you position yourself for the next phase of the microfinance industry? Please permit me to ask, how many of us have been to a supermarket? Prof here has been to one. So you are telling me that nobody has been to a supermarket. All right, let me tell you what you experience when you go to a supermarket. First of all, you go with your shopping list, Abi? And then you pick up a shopping cart. And then you go around and you are picking and putting. United Capital is a one-stop shop. It's a financial supermarket. So what I will expect you to do is, I hope you came with your shopping list. So as I'm speaking to what we do, you say, this one is my own. This one, yeah, I want this one. I'll be taking it one by one and be putting it in that shopping cart. Because by the time we are done with you today, we are not expecting that you will go to any other, all those roadside shops, to buy anything. This is where you will find all that you need to help you meet your financial need, access capital, and not just grow your business, but also scale your business. So in United Capital Group, we have multiple businesses. We have the United Capital Investment Banking, our advisory business. You're looking to raise capital. This is the midpoint for you. We have the United Capital Asset Management, portfolio management, investment advisory. There's a slide to deep into it. So this is just showing you the overview. We have the United Capital Wealth Management. Also, you're looking for a bespoke financial investment solution. This is the place for you. We also have the United Capital Trust business. You're looking for private trust, public trust, corporate trust, debenture, consortium lending. This is the shop for you. We also have United Capital Securities. Somebody was asking, how do we list on the exchange? How do we buy shares? How do we ensure our businesses are also on the exchange? This is a shop for you. We also have your own, the United Capital Microfinance Bank. We also have the consumer finance business. And then more recently, we expanded into the West Africa region. So I will do a deep dive later on. Now, just looking at our journey, how did we start? Coincidentally, on Saturday, February 14, I joined United Capital then. That's about 18 years ago. So we've seen the journey evolve from when we were a part of UBA. We started as a division in UBA, then it was UBA Global Markets, and then we became a full-fledged subsidiary of UBA. That was since 2022. And so I would say that United Capital is over 6 decades, as of today, more than 60 years old. How many of us knew that? Very few of us. So we are not just a company that started 10 years ago, 20 years ago. We've been around for a long time. Into 2012 and 2013, we are all aware when CBN said banks should no longer do non-banking activities, UBA decided to let go, of the children that they had. While some other banks went into the holdco structure, UBA decided to spin off the UBA Capital and the other subsidiaries, to the shareholders of the bank. And so that's how United Capital, was born officially. And then we were listed on the Nigerian Stock Exchange, January 11, 2013. Now, who is best to take you to list? Not just somebody who has the experience of taking companies, but also somebody who is already listed. Because we can tell you our own personal experience. As we help you in that journey, we can share our own personal experience, not just what we've seen, helping other people. A lot of people are concerned about the regulatory hurdles. People are concerned about transparency, governance. We've navigated those territory, and so we are better positioned to show you how it can be done. So we've been listed since 2013, which is literally around 13 years already. We started with an equity right issue of 1.8 billion. I will also show you, let me just tell you ahead of time, how also we've grown in the last 13 years, how our share price has grown, how our market cap has also grown in the last 13 years. Now, moving on to 2014 to 2016, we were forced to change our name from UBA Capital now to United Capital. So I will say officially we are no longer UBA Capital in quotes, even though we still carry sort of the identity, we are now United Capital PLC. A number of transactions that we've also done in the market, not just within the Nigerian market, but also, within the African market. Going on to 2017 to 2018, we also participated in the FGN $300 million diaspora bond. We launched our Eurobond fund, our dollar investment product, mutual fund product, as well as other area of mutual fund products. We've also grown significantly in our shareholders fund. And so you see the history and our journey, each milestones, we've achieved over the years, just telling you to a large extent that you're not just partnering with, let me just say Tom, Dick, and Harry, but really, you're not just partnering with Tom, Dick, and Harry. You're partnering with a financial institution that has reputation in the market, that has also built depth, and that has raised capital multiple times for itself as well as for its client. Now, this is our board of directors. Our current board chairman is Mr. Uche. He's the third chairman of the company. We had the first chairman at inception. We've also had a change of chairmanship. Now, when you see the board composition also, we all talk about governance. And for you to be listed and listed well, governance is key. And so we've been able to successfully build that structure of governance. Mr. Ucheke is a risk professional. He was formerly the ED risk at UBA. Just put this point in your head. I'll tell you I'm making reference to this. These are management staff. Some of them are here, sitting down here, so you can always engage them, after the session. You can see the CEOs also for the various businesses that are listed before. And then these are some of the key metrics that we have achieved. We are an Augusto A- rating institution, Data Pro A+. Our total asset today is 1.7 trillion. In terms of our funds under management, we have about 2.7 trillion. Gross earning has gone over 40 billion as at December last year. Profitability also over 30 billion. Like I said, our presence is not just limited to Nigeria. We are a Pan-African institution. So we have a presence in the West African region with head office in Côte d'Ivoire. Now, this is how we have helped investors in United Capital as shareholders to grow their wealth. We were listed in 2013. Our market cap then was about 12 billion. Today our market cap is about 367 billion. And I can tell you that in the last 13 years, we have paid dividend consistently. We have paid dividend consistently. When we were listed in 2013, we listed at 90 kobo. Today the shares is trading at about 21 naira. And over these 13 years, we have paid dividend nothing less than 1 naira. So imagine an investor who came in here in 2013. Trust me, you have recouped your investment multiple times. Multiple times. So this is the institution that wants to help you to also do the same thing. So for business growth, to also ensure that your shareholders and investors in the business also, gain value, we can help you do that. Now, this is our funds under management. We're a financial services group. We help institutions, retail, sovereign entities manage large pool of funds. I said earlier that our chairman of the board is a risk management person. You cannot sit on 2.7 trillion and not have risk management as part of your strategy. You cannot sit on 2.7 trillion successfully, and not have risk management as part of your strategy. Which is why the chairman of our board is a risk management person, to ensure that we are not just managing this more efficiently, but also ensuring that we can scale it significantly. And you can see how over the last, from 2017, down to 2025, we have grown our funds under management successfully and significantly. So, we are not just recognized internally. These are awards that just speak to market perception, how the market has also recognized us over the years, in what we've done. So how can we serve you? I said, this is just preamble of United Capital, so you know who you're dealing with, you know the strength of the institution that you're looking to partner with. And then now, for each of the business, so this is the place now where you now bring your card and start picking and putting, and please, by the time you have filled your card, you now go to the checkpoint. It's at that checkpoint that they now determine whether they will give you discount. So depending on what you have in your card, you can decide the percentage of discount to give to you. So make sure that that card is full at the end. All right. So we have our investment banking, which is where we advise on capital raising. And a number of microfinance banks are usually scared of raising capital. The truth is, a number of them feel my job is like, Chairman said this morning, we give money to the needy. We take care of people. So inclusion is what you do. Capital is not your business. Not knowing that it is not a case of either or. It's a case of how do I take advantage of both? How do I use capital, even to drive my inclusion story? And so that's what the investment banking guys will do for you today. Number one is not just providing you with capital or helping you raise capital. They also want you to be investable. Because you can go to the market and maybe issue and nobody's investing. Is that what you want? No. You want anytime you come to the market, whether you're going to the equities market or you're going to the debt market, investors should be able to say, oh, this instrument, we want to invest in it. So whether you're looking for short-term capital, commercial paper, or you're looking for long-term debt capital, you want to raise bond, it's interesting that nowadays we are seeing a lot of MFBs coming to the market to raise commercial paper. And I always say, you don't need the capital today to start having that conversation. You're looking to raise capital in 3 years' time. You start the conversation now. You're looking to raise capital in 5 years' time. You start the conversation now. Nobody saw the CBN policy for banks on recapitalization. Nobody saw it ahead of time. And I like what, the chief economist said. Now is the time to start looking at your business and let the professionals, let the advisors sit down and look at your balance sheet. If they have to help you restructure it, they can do that. They can look at it and advise, what type of capital do I need? What is the pricing for that capital? And how soon do I need that capital? So this is one you want to put in your cart, and sit down with the advisor to help you restructure your balance sheet and look at what type of funding capital you need. You might not want commercial paper or bonds. You might want to go to the equities market. They can help you do that. Either an IPO, private placement, depending on the nature of the capital that you need, the length of time that you need it, they can also work with you. Some of you might decide, we want to do mergers and acquisition. They can also work with you for that, ensuring that you get the right pricing. Today, a lot of people are going into M&A by force, not by strategy, because you are forced into it. It's like, if I don't close this deal today, I am dead tomorrow. And so they are forced to go into M&A. So this is one that you don't want to miss out. So beyond advisory on capital raising, you're doing projects and you need structuring support. They can also help you with that. Now we move into the asset management business. Basically, there are 3 dimensions I want to look at this from. Number one is, because we work with institutional investors, we also work with retail investors. By the time you are done, structuring your deal, you have an instrument in the market, a capital that you want to raise. Who are you going to be talking to? You're going to be talking to the asset managers, the fund managers, the people who have the capital that you need. So it is also important that you understand these people that need the money, what are they really looking at? And the beauty of UCAP, which is why I say it's a one-stop shop, is as the advisors are thinking about, structuring that capital process for you, they also engage you to say, oh, what kind of things do you want to see? How do we structure this paper such that, by the time we bring it to the market, you want to invest in it. So that conversation you're already having behind for you. So from our own angle, we are looking at instruments that we can deploy monies to. We create products, definitely mutual funds, advisory, gratuity, but from an institutional perspective, we sit on that large pool of funds. So the 2.7 trillion that you saw, it comes from the asset and the wealth management business. And we are looking for instruments that you guys are going to be bringing in, that have been well structured for institutional capital to flow in. The second thing that we can work with you on is liquidity management. I know a lot of the CFOs and the treasurers, they say, oh, we can do it ourselves, we can invest, we see the market, and stuff like that. Or sometimes they say, oh, can you give me this rate? But for you to ensure that your proprietary funds is optimal and is efficient, you need to work with somebody. You need to work with somebody. You are the professional in the microfinance bank space and in the inclusion business. We are the professionals in the capital management, liquidity management, and fund management, which is why you are going to be discounting the value you get when you just decide to do it on your own. We've created an array of products from equity funds, mutual funds, money market funds, and the rest, just so that we can tap those opportunities, make them more efficient and more optimal for you when it comes to return. So it's not a case of, oh, I will do it myself. I can see the market. It's a case of working with investment professionals to help you, number one, call the market right. For instance, the chief economist said rates are trending downwards. We still see a lot of people buying short-term instruments and locking their rate. So if you buy an instrument today at 20%, for instance, you know rates are trending downwards. What does that mean? By the time it's maturing in 60-day time, that 20% has dropped. But you still see people doing the same thing. You know, because 20% looks attractive, not knowing that with this 20%, in 6 months, in 3 months, you may not get it. Why not just lock it for a much longer period of time? It is what working with an investment professional will help you do. And then lastly, the third part is really still around liquidity management, but how money market funds can help you to be more efficient. A lot of the time we see people keep large amount of money or similarly large amount of money in their bank account. They say, oh, I have salaries to pay in 1 week, or I have an obligation in 2 weeks. I just need the money. Let the money just stay there. Whereas that money can sit in a money market fund. You are earning decent return. A day to when you need it. You can call it. Even you can call it out anytime. It's like a call placement for you. But it is far more than a call rate that you get anywhere else. So these are the 3 strategic opportunities that the asset management business can provide for you. Now let's go into securities. And again, I forgot to say this. As you pick up that card, you're not just thinking for your business. You're also thinking for yourself as an individual. A lot of people are cleaning out the equities market between January and now. Zenith Bank closed at 61 at the end of last year. Zenith Bank reached almost 90 yesterday. Touch 90. People have cleaned, have packed money, in a trailer box and gone home. So when we are showing you this opportunity, it's not really only for your business. The primary, yes, for your business, but you're also thinking, okay, the business can benefit. I can benefit. The business can benefit. I can benefit. So the securities business basically helps you to get listed on the exchange as an institution. I think we have about 2 microfinance banks currently listed, and it will be good to also hear their stories over the years. The truth is being listed has its own requirements, has its positive. You don't have to be listed, but you must be listable. Yes, you don't have to be listed as a microfinance bank, but you should be listable. You must have the qualities of being listed, even though you may not necessarily be listed. And one of the critical qualities, somebody asked about that, is strong governance. Strong governance. Institutional investors are looking for institutions or firms that have strong governance. What listing helps you to do is it helps you to build that governance structure. That discipline. Yes, there are quarterly reporting that has to be done. It's discipline. It's accountability. So working with the securities business, they can help you get listed. They can also help ensure that you are also building wealth and extracting value from the capital market. I like what I saw, when they say at least 7.5% of your shareholders' fund as a MFB institution can be invested in the equities market. So why are we not taking advantage of that? You have the professionals that can sit with you and guide you. A lot of the time when we think about the equities market, we're thinking about risk. What if I lose my money? But there are stocks there that have done consistently well. The job of the professional is to guide you on which is the right stock to invest in, not based on sentiment, but based on fundamentals. And so these are the guys that you have to be speaking with. And then we have the consumer finance business. Now, the essence of this business is really a 2-edged sword. How do I put it? I talked about asset management you're investing. Imagine if you already have an investment with us, or you have an investment anywhere, and there is a need for liquidity. You have treasury bills, for instance, or you have any government securities, or you have equities, and there is a need for liquidity. Instead of selling that instrument, what the consumer finance team would do, would take that instrument and on the back of that, give you a loan. Now, your job is to give out a loan, no? But there are other people who can also give you loan, to support your business and to support yourself, So what the major role of our consumer finance business is to provide asset-backed financing, whether on the back of treasury bills, government securities, mutual funds with us, or you have investment in equities. Those equities don't have to be with us. When you need to access loan on the back of those equities, we ask you to bring it to us. So every form of liquid investment that you have, you can trade it, for an opportunity to access capital. And so when we talk about capital, you have to look at it holistically. So capital can be, I'm going to raise money through different forms. Capital can also be, what do I have in my hand that I can use as a collateral to access funding? And so the consumer finance team, cannot be the point of contact that you need, for such capital. Now we also have the trust business. Capital requires trust. Capital will not go where there is no trust. And so part of having the trustee business is to what I call be your silent partner. Confidentiality for them is their hallmark. So with the trust business, we provide private trust, we provide public trust, we also provide corporate trust. So you have an asset, and you want to access lending from multiple institutions, they can act as the independent party that will hold that collateral and enable you to access, funding from multiple institutions. Somebody talked about collaboration, and this, I also think this is one area where you can collaborate effectively. You are dealing with retail. You're dealing with people who don't even understand the concept of trust. A lot of them, by the time you give them loan, in maybe next couple of years, one story or the other, either their disease or stuff like that. When you partner with the trust business, what the trust business can do, can help you. The same way you incorporate insurance in that loan, you can also incorporate something like a trust in that product, such that at the end of the day, you're not just covering one side or the living side of your clients. You're also covering whatever happens to them afterwards. So this is one business that you also want to partner with. You earn fees, both parties share the fees. You increase also the profitability of your business. And in our wealth management business, similar to what I said, the asset management, one of the critical things that you can do here for a lot of people that are looking for opportunities offshore, investment opportunities offshore, this is the shop that you have to visit. This is someone you have to be talking to. Whether you are looking at it for your own individual self or you're looking at it from the institutional, we can help you assess a lot of investment opportunities that are not present within our local market. And so at the end of the day, you're able to diversify your portfolio, not just on a currency perspective, but also from a geography perspective. All right. So to a large extent, what I've been able to do is to show you how United Capital as an institution can more effectively partner with you. Like I said, we are not here to sell product. We are basically here to show you how, the institution that you're going to be dealing with going forward. I expect that your cards are now filled, both on a corporate level and a personal level. The CEOs are here, the executives at United Capital are here. At the end of the sessions, you can engage with them more intimately to say, this is something I picked that I think is useful for my business. Any microfinance bank that is thinking that, you can continue to stay small, like the chairman said, you'll be surprised what will happen afterwards. You'll be surprised what will happen afterward. The next growth phase for Microfinance Bank is really around building structures. It's really around ensuring that you have the right governance to be able to attract capital. And with United Capital, across our various area of business opportunities and platform. We can help you to do that. You really don't need to be moving from one place to the other. Within one institution, we can bring to you all that you need for the next phase of your growth. Thank you very much for listening.
Thank you very much, Dr. Oderi Ogene, CFA, DBA. Thank you. All right. Okay, we are getting closer home. All right, distinguished ladies and gentlemen, indulge me as I encourage us to, just stretch our hands, stretch our legs. We've been sitting for about an hour plus. So please, let's just, walk around, shake somebody, smile to somebody. Please make sure you're standing while we prepare for the, panel session. Please, just shake somebody. A lot of people came in, while we started the session, just to engage and say, good morning, good to see you. Yeah. Yes. Leg break. Okay, all questions for United Capital will be addressed after the panel session. So please write down your questions, and all the executives, all the, leaders in United Capital are available to address our questions. We still have the chief economist of United Capital in the house if you need further guidance on some of the, presentations he has done. And you can grab a cup of tea at the back too. We still have tea left. You can grab a cup of tea. You can drink water. You can also, use the restroom. Let's go. All right, thank you, ladies and gentlemen. We go right into the panel session. Okay, we can grab a cup of tea and make our way back to our seats. Hey. All right, distinguished ladies and gentlemen, please let's make our way back to our seats as we go right into the panel session. Okay. The panel session for the next growth phase for microfinance banks, exploring growth, market insights, and strategic opportunities in 2026. This session will be moderated by no other person than Mr. Taiwo Joda, FCIB, FNMI, MCIOD. All right. Mr. Taiwo Joda is the Managing Director and Chief Executive Officer of Action Microfinance Bank with over 30 years of experience across banking and finance and strategic leadership. Widely regarded as a transformational CEO, he is known for driving financial inclusion, digital innovation, and building high-performing institutions within Nigeria's microfinance ecosystem. He is a distinguished former chairman. Yes, he was a former chairman of the National Association of Microfinance Banks, Lagos State, and has served on several industry and policy platforms. Under his leadership, Action Microfinance Bank has been recognized multiple times as the Microfinance Bank of the Year, while he has also received CEO level awards for his contribution to the sector. Please join me as I welcome on his seat, Mr. Taiwo Joda. All right, to join Mr. Taiwo Joda on this panel as a panelist is Mr. Olaribigbe Jimoh Osabia, FCIB. Mr. Olaribigbe Jimoh Osabia is the founder and group managing director, Reliance Microfinance Bank. He has over 25 years of experience across banking, capital markets, asset management, and financial advisory. He has led and managed large-scale portfolios and has been involved in major financial transactions across Nigeria's financial service sector. Prior to founding Reliance Microfinance Bank, he held senior executive roles at leading institutions including UBA Group and Wema Registrars Limited, where he served as CEO. His career reflects deep expertise in institution building, financial strategy, and long-term value creation. He is leading a legacy and a trailblazer in every sense of it. Please welcome on a seat Mr. Osabia. And to join Mr. Osabia from, our legacy microfinance bank. This microfinance bank transitioned from being a community bank, so you can understand what I'm saying, is Mr. Dr. Tokpe Ayorinde Olonini, the co-founder, Infinity Microfinance Bank. He is a financial consultant, investor, and co-founder of Infinity Microfinance Bank with core interest in microfinance, insurance, and housing development. He also serves as the managing director and CEO of MIP Insurance Brokers and sits on the board of several financial and housing-focused institutions. With early career experience in Nigeria insurance and banking sectors, he transitioned into entrepreneurship and consulting, where he has continued to drive financial inclusion and enterprise growth. He combines professional leadership with community impact, including pastoral leadership in Lagos State. Please join me as I welcome on the seat Dr. Tokpe Ayorinde Olonini. And to, balance the equation, yes, we have Dr. Gbadebo Aderele, the Managing Director, United Capital Investment Banking. Dr. Gbadebo Aderele is an astute investment banker with nearly 2 decades of experience advising government, corporate, and financial institutions on capital raising, corporate finance, and project finance transactions. His career spans major role at leading Nigerian investment banks and advisory firms. Before joining United Capital, he spent over a decade at Vertiva Capital Management, where he led the investment banking team and advised on complex multi-sector transactions. He brings deep transaction expertise, leadership, and strategic insights to his role. In addition to dissecting financial transactions, Dr. Gbadebo is also a trained medical doctor, and this is evident in his precision and attention to detail. Please make welcome Dr. Gbadebo Aderele. And finally, and not the least, the only gender that exists on this panel. It's an inclusive gender, don't mind us. It's an inclusive panel. I'm an advocate of gender equality. Yeah. We have Dr. Odiri Ogine, CFA, DBA, the Managing Director, Chief Executive Officer, United Capital Asset Management. Like I read earlier, Dr. Odiri Ogine leads, the asset management group asset management company in United Capital. Please make welcome Dr. Odiri Ogine. Thank you. You have the floor, sir.
Hey, there's gender imbalance in that clapping. Can we put our hands together for Dr. Odiri? All right, good morning, distinguished CEOs, ladies and gentlemen. Before we go into today's session, I asked Dr. Odiri a question. She started by talking about a supermarket. And she came out with a array of products that we can actually plug into, right? And I know something typical of supermarket is also that they have Black Friday. So I was asking her, you didn't mention the Black Friday. Because in fact, there are days that on a Black Friday, you can go away free. And I've seen that happen in the UK before. You just get everything you need in your cart and move away free. But this is a second coming. So she will have to answer that question. That if we want to buy all of this, are we going to buy at the same rate on a normal day? And since United Capital is declaring Black Tuesday today, then we'll see what else we can take away with us. We have 45 minutes for this, but let me just again say good morning, distinguished CEOs, directors, and leaders of our microfinance industry. I'm the moderator. My name is Taiwo Joda, and I'm here today, not just as your moderator, but also as a colleague in the trenches. Leading up to the moment I'm preparing for this convergence, I found myself reflecting on my own journey at Axiom Microfinance Bank. I thought about the sleepless nights over liquidity gaps, the excitement of onboarding new depositors, and the constant tension between our social mission of financial inclusion and the commercial imperative to stay profitable. And I suspect many of you in this room share that dual mandate and dual headache. How do we serve the underbanked while also delivering returns that satisfy shareholders? Now, let's address the elephant in the room, or perhaps the 900-pound gorilla standing in the door of every microfinance bank in Nigeria: recapitalization. We all know the numbers. Unit banks jumping from 20 million to 200 million. State banks from 100 million to 1 billion. National banks from 2 billion to 5 billion. Yet, the Central Bank of Nigeria, at the last COMBI meeting, emphasized on the need to raise capital again. If I look around this room, I know that for many of us, our first instinct over the years has been to look inward, to trim costs, to tighten credits. But today, I want to challenge that reflex. What if the biggest threat to our survival is also our biggest opportunity for transformation? The truth is, we cannot and will not be able to save our way to another round of capital raising. We cannot grow our way to relevance simply by increasing the interest rate we charge the petty trader at the market. To enter the next growth phase, we have to stop looking like microfinance banks. And let me emphasize that. You can do microfinance business, but don't look like microfinance bank. And that's why when I was coming this morning, I had to go and buy a suit. The doctor is smiling. So we have to stop looking like microfinance banks to the capital market and start looking like a viable investment destination. Something is shifting in Nigeria. Just look at the news headlines from the past few months. We're seeing a wave of consolidation and innovation where fintechs like PayHypo is acquiring maritime microfinance to gain deposit-taking license. We see YC-backed Rank, formerly Money, acquiring Zazazao MFB, moving from pure lending into a regulated community finance model. We see Fair Money, MoneyPoint, Kuda, and others aggressively pivoting from a digital lender into a full-service MFB, targeting the MSC banking gap. These players are not just looking at the 40 million Nigerians excluded from the formal banking, they're looking at the capital market. The CEO of the Nigerian Stock Exchange, Mr. Jude Chiemeka, stood before a gathering just last year and explicitly urged us to look at bonds, social impact bonds, and equity financing. He told us that the liquidity constraint we face can be solved by the very market he represents. And there's a pathfinder amongst us, and I'd like us to acknowledge Mr. Abib, the MD of MPF Microfinance Bank. He stands alone as the only microfinance bank today listed on the Nigerian Stock Exchange. But by that singular example, they have showed us it can be done. Growing from a modest base to a customer base of 1.5 billion and ranking among the best in capital appreciation. They are proving that listing brings transparency, stability, and access. But here is the uncomfortable question that I want to leave with you before we proceed with the panel. If the path is proven, why are there still 800 plus microfinance banks in Nigeria and only one is on the stock exchange? What's the ratio of 1/800? Is it that we are not ready for the capital markets? Or is it that the capital market simply does not understand us? Our balance sheet look different. Our risk models are based on social trust, not just collateral. Our clients don't have audited accounts. So how do we translate the story of the woman in the market who repays her loan 96% reliably, as Rank reported, into a story that an institutional investor will want to buy? That's the crux of the discussion today. The next growth phase is not just about the meeting CBN deadline. It's about re-engineering our institution to be investment ready. It is about moving beyond deposit to assessing the debt capital market. It is about structured finance that can securitize our loan portfolios. It is about strategic partnership, not just with fintechs, but with pensions and asset managers. And if I'm allowed to sell, with United Capital. Today, I have the privilege of this distinguished lady and gentlemen who are leaders navigating these waters and who are representing various institutions that are here to help us set the pathway. We'll be looking at funding options, structural finance, listing decision, and consolidation where necessary. Please once again join me in welcoming these distinguished panelists. And setting the ball rolling, we've heard from Dr. Oderi, and I'm going to start again from her. And, I'm going to ask this question, Dr. Oderi. We have seen a flurry of acquisitions. Do you think this means death knell to small microfinance banks? When the chairman came up, it sounded like a threat. The economics came up, sounded like a threat. And then when you came up, he said, hey, you left it hanging. He said, if you remain small. And then you went to sit down. Does it sound like a death knell? Are you saying we cannot be small and do our business? What really do you think the MFBs need to do? Do we need something stronger, or is the market just correcting itself?
All right. Thank you very much. Good morning, everyone. Hello? Okay. Good morning, everyone, once again. I think this is a very interesting conversation, and I think I like the fact that we've established that we don't want to be small, but we don't know how not to be small. The truth is, we need to tell the microfinance bank story in a different way. There is a core social mission that is attached to the microfinance bank landscape. But that narrative, if we don't tell it properly, it will now continue to suffer. I don't want to use the word shame, but it will continue to suffer lack of understanding and lack of acceptance. So it's not a case of you have to be small to drive financial inclusion. No, you don't necessarily have to be small to drive financial inclusion. What we are presenting today is an opportunity for you to develop skill while still ensuring that your core mission of financial inclusion is protected. And we've seen the rise of fintech. What fintech basically has told us is that you can scale anything. You can actually scale anything. So with the mission of financial inclusion, with the social mission, there are enablers and tools that you have to put under to ensure that you scale it and you scale it profitably. There is a perception that, I need to stay small to be able to achieve this mission and be profitable. And we are here to say, no, it doesn't have to be that. You can achieve that financial inclusion, that social mission, and still be profitable and still scale. The question is how? How can this be done? I think that's the question.
Yes.
Again, another thing that you brought up is around some of the fintechs that have seen acquisition. I'm quite familiar with Bankley because I know a lot of injured investors. I'm also part of an injured investor group that invested in Bankley. So we've seen in the fintech stories have evolved. One of the things that these fintech have done, particularly those that are playing actively in the financial service, is just go and get a microfinance bank license. Just go and get it. So they are now acting largely as competitors for you guys, but they don't necessarily have to be that. A lot of them have shown that this mission of financial inclusion can be scaled through technology. The question I will ask every one of us here is what is our technology readiness or structure within our business? And that is what assessing capital can help you do. So when I say you don't necessarily have to be small, to remain profitable and to achieve your mission, I'm saying that you have the license already. You have the structure to drive that social mission, but there are tools that you need to build in to be able to ensure that you scale and you scale profitable. We all know that technology can help us to be more efficient. But you cannot access those technology that is required without capital. And so that's where capital comes in to enable you. Capital is just a tool. It's just an enabler. It's not a threat to the mission. It's not a threat to your purpose. It's an enabler to ensure that you're able to deliver that purpose more efficiently. You're able to deliver that at scale. And so when we see the likes of MoneyPoint and OP coming into that space, what they've only brought into that space is the technology that has helped them to scale, but they have not compromised on their core mission. I'm buying plantain from the street and the guy is giving me MoneyPoint account or OP account or, a lot of those guys that sell even at very retail level, they all have POS now. Yeah, a lot of them. But that's still the mission. That's still the purpose. That's still financial inclusion.
Okay, Doctor, let's hold it there. Thank you very much. I think you've just hit it on the table. Dr. Tom, several years back, some 6 years, you went to the market when it was clearly uncharted to raise commercial for Infinity MFV. And we all read in the papers that it was oversubscribed. What emboldened you? What did you see? How could you, from navigating the murky waters of community bank to a microfinance bank, just step out and say, I'm going to raise a commercial paper from nowhere? And what is the learning curve like?
Okay, thank you very much. Congratulations to NAM, the United Capital, for putting this together. To the questions that you have raised, yes, it was we didn't even know we are going to be the first microfinance bank to raise bonds, in the FMDQ market. Of course, we've been around for a very long time, since 2007 as a microfinance bank. Before then, we were a community bank, and we've grown consistently. And we've also grown a lot through retained earnings, so we're able to grow our capital from the mega 20 million to, over 2 billion today, of course, and been consistent over the year. At some point, what really brought that idea for the first time was that some of the partners we were looking for from overseas, we realized that the fluctuation in the naira was not really putting us on an advantage, and they keep on saying, okay, initially until your balance sheet hit $5 million, then you come back. And we just saw that, okay, when we thought we are almost there, naira will depreciate again and we'll fall backward again. And this thing kept on over and over, and then we began to look inward, and then we have some advisors, and we were just told, okay, why don't we just also try this? Of course, before then, we were able to partner with some institutions like Oiko Credit. We are also their first partner in Nigeria. We had just a mega 50 million then long ago. So we began to look inward. Then we discovered that there are also opportunities. Of course, when we thought of the capital market, we thought that, is for big players. But we will realize that even in the capital market, there are so many layers. There are so many levels at which you can come in. So we decided to give it a trial, and boom, we're able to raise the first. So I think we're on the fourth or fifth tranche now. The last one we did was 1.8 billion, which has been paid down. And we are warming up to go back again. And something I can say categorically that it helped us to expand our business, to expand the scale of the business, so much that we know that we have to continue to get it bigger and bigger, because the business has already expanded. When you expand the business, you don't want to slow it down again. And of course, we are not dealing with them only. We also have other sources. As for you to play in that market, you need to be rated. We are rated by Augusto, and rated by another rating organization as well. And there must be a minimum rating. And when you begin to get rated, the rating organizations too will begin to point you towards certain direction. You will know that you need to begin to do your business in a particular way. If not, you will lose your rating. Just like CBN too does over the years. So it's all about discipline, just like Mrs. Odiri said. It's all about being consistent, it's all about investors looking at your track record. And good enough, we have a lot of opportunities, funds, even in Nigeria, of which. Hello.
How long did it take you to actually, from the moment you conceived the idea that you wanted to go, how long did it take you to close from start to finish?
You mean the...
Yes, and how many resources do you have to commit into it upfront? The first series of CP you raised.
Yes. Yes, incidentally, it's not something that is so complicated. The most important thing that you must have an advisor, an arranger, and then you must get rated. Once you get all of that into places and you put it together, they will fund, and then of course there are, rating is not cheap. You have to fund that, and you have to also repeat it like every time, so some cost is going to it. Then the arranger themselves also charge, Apart from that, once all these papers are put together, in 1 week, the funds are in.
Just 1 week, just like magic.
Exactly.
So when you woke up, I saw 1.8 billion in your account. What did you do? Took a vacation?
Yeah, incidentally, every time we go, you can get oversubscription if you want. It all depends on the pricing.
Thank you, Doctor. Thank you, Doctor. Let's pause there. I'm sure you've whet a lot of people's appetite. And I'm sure they will mob you before you go today. All right. But that's one good story. And I think it deserves a round of applause. Thank you. Now, if it was another platform, I'll have asked what a medical doctor is doing. But let's leave that for another day. In finance. So you can be sure that this is doctoring money. Now, a few words came out, arranger from Dr. Tokpe, advisor. Rating like you're doing a movie and is rated violence, nudity, and language, 18 or whatever. So could you just break down these words? And number two is, what will you regard as the minimum level of readiness for anyone to even come to United Capital to want to say, and you will be willing to listen to them? Can the 100 CEOs today knock on your door tomorrow morning, or you will tell them, please, before you come with your YX certificate? Doctor.
Thank you very much, and good morning, everyone. I think well done to the organizers, to the association. This is a very good platform. In our little experience, we find that this kind of platform is always useful for sectors. So here there are a number of players and you're all getting information around how to raise capital. What is required by each MFB is different. You all have your different strategies and all of that, but you all need to grow. And that's common with everybody. It's like a lowest common denominator, so to speak. And this kind of platform allows everybody to start thinking together. And I like the story shared by Affinity. If anything, I think beautiful there, because it just helps to do our own job from this side. And as I've been introduced, I look after the investment banking business at United Capital. And my colleague, Dr. Jiri, has already given you the supermarket model of all the things we do. But the part that I look after is the part that does advisory and capital raise. And in technical sense, we say that's the sell side, right? The buy side is the people that have the money. The sell side are the people that prepare you to be able to access the money. If you understand it from that perspective, then to the point you made around advisor, arranger, that's the work we do on this side. I'll jump to your second question, and I'll say we have a number of CEOs here present. I think first is a number of my colleagues who head the different businesses that advise companies in this regard are also in this room, so I'm sure a number of them have been speaking to our colleagues. But again, that's, I think, let me just walk back a bit, right? Every business requires a growth plan. What we support is advise you or support your strategic growth initiatives. Those growth initiatives, because you are regulated by CBN, you have to have regulatory capital. Now, because that regulatory capital is about to be stepped up, or we're looking at a number of things happening from banking to capital markets, from traditional banking to capital market, we expect the microfinance banking, it's coming, it's in the offing. Then it's always important that you start getting prepared. You start fine-tuning your strategies, your plans. To the question around size, right? Everybody's strategy will be different, but I agree, as the market is opening up, every business wants to grow. The pace at which you grow will be determined by your strategy. A number of pathways are open to raising capital. You have the short end of the market where you can raise capital for a short period, and I believe that's the commercial paper program you are speaking to. And you have the longer end, bonds, which are longer tenured, and equity, which is more permanent capital, right? That spectrum, you can decide what is appropriate for your business, and then working with your advisors. Your advisors and arrangers most likely is the same firm, but it's just the advisory is what comes before you go to the market, right? You can now plan how we access the market. One of the simple ways of looking at it is when you borrow short-term money from the market, you borrow for 180 days, 270 days, you pay back. You come back again, you borrow for another 270 days, 364 days. The rules have changed a little now, so you can go to 364. You pay back. Investors are tracking you. They are seeing that, look, your credit, your ability to repay, right? But the process that you go through even before you access the money is what you've talked about around rating, investor readiness, looking at your story. The whole process of you engaging with the advisors would actually make you rethink your business again. Why? Not because you don't know your business. The work we do, right? We do this for mid-sized, large-sized, several entities. But that whole process helps you to fine-tune again, because now you want to talk to external parties, right? And from those external parties looking at you from short-term funding, the best way is for you to start from short-term, then go to longer term, and then go to equity. But
so I'm not going to let you off the hook. Now, I'm going to go back to that question. You're just there. You can go short term, you can go long term. So for a microfinance bank that is 3 years old, 2 years old, 5 years old, can they come to United Capital? What product will you sell to them? Do we have to attain a particular age and threshold before we come?
Yeah, I'll make it very short. The answer is yes, and I'll give you examples. You have an example in the room here who has already gone to the market. Can any other person come? Absolutely. Some of this information is public information, right? There's a Capital Sage group. That group has, I think, Colomoni MFB. I don't know if they're in the room, right? They're also a microfinance bank. They've raised monies. The group has raised money several times. We've supported them over the years. In fact, that group expanded to Gambia. We were invited to join them in that expansion. In terms of, we went with them to Gambia to just witnessed the flagging off of their business in Gambia, and they're doing well there. Lapo Microfinance Bank is a bank that we have supported as well in the past. They raised some bonds in the past as well. It's probably one of the bigger or one of the older microfinance banks. More importantly for Lapo, after raising money with them, after helping to raise money in Nigeria, we also helped them to raise money in Sierra Leone. 2024, Lapo Microfinance Sierra Leone was the first corporate bond issuer in the country. It was United Capital that acted as lead arranger on that.
Thank you very much. I think you've killed it. The answer is yes. You're missing good opportunity to put your hands together. Thank you. Now, I'm going to ask a question around governance. Because when you're making your presentation, Dr. Odiri, you were talking about governance. I mean, how does transparency, how does putting your financials together, what is governance? What has governance got to do with raising capital? I'm going to ask you, and I'm also going to ask Mr. Shabi. In your organization, you're very active in the capital market. How does governance resonate with you? What is the story you can share? And again, then just like that, I'll go to Dr. Tokwe. You're going to tell us, in your capital raise, how did governance help? Thank you. I'll start from you, Doctor.
Thank you very much. I think that's a very interesting question. So the way I will respond to this, how does governance have to do with raising capital? Will you give your money to somebody or put your money in something that you don't know anything about it? So basically, to a large extent, governance builds trust, and capital will always flow to where there is trust.
What is governance?
So governance really is around how a business is being run and managed, and the level of accountability and transparency that is built into that business. You know, and when we talk about governance, a lot of time we look at it from the board of board of directors. It starts from there, because these guys are the ones that have strategic oversight over what the management does. You know, so when an investor is looking at an entity and saying that this entity is well run, they look at it from the top. Who are the board members? You know, what is their reputation in the market? What is their capability? What is their competence level? You know, so it starts from there really. But governance is not just really only around the board of directors. It flows from there. It also includes, to a large extent, the activities that you do. How transparent are you in the things that you do? The audited financial report is basically like a report card. It's a transparency report that anybody can pick up and understand to a large extent how the business is run. You know, I don't necessarily need to work in the business. I can pick an audited report, you know, and review it, and I can tell you whether this company is heading forward or is declining. And so that is still part of governance.
What if you cannot even access my audited financials?
That's where the problem comes. If I want to invest in a company and I cannot access the audited report, which should be basically the thing that tells me about that company, then why will I invest in it? Which is why when you are coming to the capital market, these are requirements, because it means that the investors who are going to be reviewing and making a decision on whether they invest should be able to access that report. Which is why the NGX or the capital market ecosystem ensures that you have quarterly reporting. It is not audited account that 2 years ago. It's to a large extent still, you know, so they need to be assessing to as quickly as possible, as frequent as possible, the health of the business, which is why audited account is important. And it's audited to the extent that they're not going to rely on the management account, because they feel that an independent person, you know, has reviewed and certified. And that's still part of governance. You know, so like I said earlier, governance builds trust and capital flows to where there is trust.
That's a very powerful statement. Governance builds trust and capital flows in the direction of trust. Mr. Oshabi, how has governance helped your microfinance bank? Reliance. How reliable is Reliance?
Good morning, everyone. I'm glad to be here. And I would like to use this medium to appreciate United Capital team and, of course, the chairman of NAMLAC. For me, this is a very good forum, and it is more like a very good eye-opener to every one of us here. Without necessarily delaying or bothering, talking about governance. Governance is something that has actually worked for us at Reliance. And I'm going to share a very practical experience. What do I mean by that? I remember when I was setting up Reliance Microfinance Bank, I approached one of the directors. Of course, when I told him, no, Microfinance Bank, no. Your lending is highly unsecured. I said, okay. Of course, I know him. He's very influential in Lagos. I said, okay. I went to him. Are you willing to just be a director? He said, okay, all right. It is you. If it is you, I don't have any doubts. So we started. And that speaks to what we call governance and transparency and accountability. While we started that journey, he didn't save. We were having our normal board meetings. Of course, when we started, we were not having the committee. As we grow, post-2020, we liberalized it. We put the necessary structure in place in terms of having the board meeting, committee meeting. That confirmed that when you are doing a business in a very transparent manner, people will build confidence. Over time, this director begin to, patronize in terms of giving us referral, in terms of moving his investment from one mortgage bank then to us. His wife, his investment are all with Reliance Microfinance Bank. That also confirmed that whenever we're having board meeting, of course, we always lay the card on the table. The level of transparency we have displayed also built that trust in what we are doing in terms of also bringing referrals. Yes, speaking to the issue of governance and transparency, sometimes 2025, August, we just decided that let's approach Data Pro for rating. And when I saw the rating, I shook my head. Sometimes ago, the Development Bank of Nigeria, they approached us. When I got the email, I said to the CEO, do I really need these people's phone? And when they came, they said they can see that we are doing extremely well. So, oh, really? Okay, what do we do? Well, we are ready to partner with you. We are ready to support you. Here we started. They sent their consultants, and one Mr. Ojoshikpe said, Oga, you are doing what is valuable.
Thank you very much. You're doing what is valuable. They had a beautiful governance, and even it is the investors, the fund provider, that is saying we want to do business with you. So nothing sells you like good governance. Will you agree with me? So if we come to you, and we should be able to see you as you are. I'll put you on the spot. Your wife is the MD. No, Dr. Topper. Your wife is the MD of your organization.
Currently chairman.
Currently chairman. Yes. You are a director.
Well, I'm a co-founder.
You're a co-founder.
I've been on the board for so long.
Sorry, when people come in to moderate, they know that it's a no holds barred. How do you balance this with governance?
Pardon?
How do you balance this with governance?
Oh.
How are we sure that decisions are not taken in the bedroom before the board meeting?
Oh.
Don't mind me.
Well, talking about governance, I'm going to answer your question.
Thank you.
Talking about governance, I would say governance is the most important thing, in any business, particularly for a microfinance bank. And I will also say that good governance, good corporate governance has also been the secret of our consistent rise. Starting as a Susu company in 2001, becoming Community Bank 2005, and becoming a microfinance bank 2007, paying dividends consistently for the past 17 years to investors. And some of all our initial investors have already received more than what they initially invested. Now, governance, I don't want to waste time defining governance. We all know what governance is. But let me tell you, governance boils down to daily discipline.
Daily discipline.
To do what you are supposed to do at the right time. The first signal you will see in a microfinance bank that does not have good governance is that reports will not be coming out on time. Annual reports. Auditor reports, somebody is just sitting on it somewhere, one excuse or the other. I don't think at any point in time our reports go to the CBN later than March. Immediately the auditors come in, everything is done. It goes back to daily discipline. And I'm going to give credit of that to all what the stakeholders have done, including my co-founder, who is now the chairman, the management team. It's a culture of excellence, discipline, And I will also say very quickly, that there are so many structures that are already there that can help us to put good governance into place. CBN is already one of them. When we started and we started growing, when CBN come and they say, you must do this, when they mark us down in this area, initially we were thinking they were just being difficult. But over time, we learn that banking is not something new. They are bringing the experience of, in fact, it's free consulting they are doing for you. They are bringing experience of what have made other people to fail to bear in your organization. There's some of this partnership we did. When they come, they do their assessment. They tell you before you can deal with you must do this and do this. Oeco Credit, DBN, so many of them, Lagos State government. They force you to begin to put certain things into place. And the more you put them into place, then the rating companies, so all these opportunities are there. Now, for the issue of a governor that you talk about, I think it's all about integrity and the intention of the people. If you do not have integrity, you will misuse the opportunities that you have.
Excellent. Thank you very much. It's all about integrity. I think you nailed it. You can actually own your microfinance bank and not have your family, but you can carry all the stooge who will say yes sir to you on the board and make them board members. And that is lacking integrity. We're rounding up and you're going to have opportunity to ask questions. Please start putting down your questions. You want to say something? You will, but let me ask my question because of the time. The only microfinance bank quoted on Nigerian Stock Exchange after 20 years of microfinance bank in Nigeria is even Nigerian Police Force They don't want to be called Police Force. They said MPF Microfinance Bank. Take a bow, please. Take a bow. Is it that it's difficult to be quoted? Yes, for both you and Dr. Udiri. Is it that it's so difficult to be quoted? Why is it such a problem? Or is it the businessman mentality to want to hold 100% of 10? What's the issue? Why are we only celebrating MPF today? And you've done 16 times appreciation in less than 3 years. I was looking at your books. Excellent. Well done. Well done. That speaks to governance. I'll visit you in the office.
Okay, I think a lot has been said, and it's a combination of what you said regarding the microfinance space is evolving. So if you cast your mind back, the traditional banking space some 20, 30 years was perhaps in this kind of state. Perhaps not, you can say, you remember the time we had 89 banks in Nigeria, traditional banks. Right, we don't have half of that again. So what is happening is not new, right? And it's perhaps good. There was some notes I was taking, and I still think Microfinance banks, you're looking at yourselves and saying you are here, and then MF, OPay and some other ones, the fintechs are here. No, I think you should look at yourselves as technology players with microfinance banking license. With the age of, with what's happening with technology, AI, and all of that, you should look at yourselves nothing different from those players you're talking about. Some of them are in this room, actually, right? But to your question about, is this so difficult? It's not. There are three bosses on the Nigerian exchange, for example. There's a growth board, there's a main board, and there's a premium board.
First one.
Growth board. A main board and a premium board. The main board is like the one that a lot of people are listed, a lot of companies are listed on. The premium board is the board where some of the bigger corporates, the governance requirement there is quite high. Just a few companies are there. But the growth board is one of those boards that allows for mid-sized players to also start looking and considering this opportunity. You get listed on the growth board, then over time you can also migrate to the main board. Even from main board, you can migrate to premium board. There is nothing impossible is the real point. And the platforms, NGX already, that's Nigerian Exchange, already allows for that already just by the makeup. But the real work is, it's not only equity. Right? Equity is just one of the types of funding, right? And you're working with your advisors, but you have to also start from your finance team, from your strategy team. What kind of capital structure do you require? What's the regulatory requirements? You have to meet that from an equity perspective. What other type of funding? Because of the kind of business you do, you want to consider blended finance, right? So I heard DBN and did I hear BOI, So concessionary funding should be one of those things. How are you selling your story? Those are the things your advisors will work with you on, right? And it's not rocket science. You have two players in the room here. They've done these things. A number of players here that have done a few things. I've mentioned a few others. My Credit, for example, is one of those that we also work with. There are a lot of players that you mentioned VFDs, or someone mentioned VFD. I think it was my colleague Esther earlier on, or was it Dr. Someone mentioned VFD. They are raising a CP now. We supported them on their last two equity raises, right? I think that was not the group, but their MFB is there.
So your bottom line is capital markets can be accessed and we can get listed.
Absolutely.
I'm going to give you 20 accounts for CP, and the one that will go to capital market from these people. I'll be your chief marketing officer. What will be my commission?
We'll discuss that. We'll discuss that after.
Okay, let's move to Dr. Deary. Let me have your perception about this capital market. We just run away. PLC. You address it from ownership perspective. And how long does it take? How difficult is it?
All right. Is it difficult? No. And my colleague has said that. Is it possible? Yes. Can it be done quickly? Yes, it's possible. I think the issue is it part of your strategy, really? Because a number of times when we design our year-on-year strategy, are we thinking about growth? Because capital flows to where there is growth. If your strategy is growth, you get to a point where you cannot be the one to provide that money. Imagine, an initial capital of 20 million. Yeah, you can take it out of your purse. It moves on to 200 million. Oh, a few friends will add together, we'll put it down. But when you now begin to get into 2 billion, 5 billion, you now begin to think differently to see, how do I assess this capital? And so the spectrum that you follow to drive that capital is what eventually takes you to the capital market, either listing or the debt capital market. So what we are saying now is the microfinance bank has left that spectrum where the capital comes from your pocket or from your family and friends. You now need to begin to think of, for me to grow, I need to access capital on this level. So it's not a case of whether it's possible or it's difficult. No, it's a case of what is your growth strategy. capital will flow to the level to which you are willing to grow. And he said something very profound. By the time they expanded, they had no choice. They had to continue to expand. And so what that will do for him is he will now begin to say, okay, it's time to be listed now. It's time to, move from the premium board to the main board to the growth board in that dimension. So it is really around what your growth strategy is. And that will now determine the type of capital you're chasing.
Thank you very much. Mr. Shabi, you now have an opportunity to answer the question you wanted to answer. But in addition to that, fintechs, how should we see them?
Thank you. What I actually wanted to say before is to encourage our colleagues here to have a shift in mindset about growing the business. As long as you are still thinking as an owner and as an entrepreneur, you are not trying to widen up the business. You might not be seeing the need to access capital, external capital. That's one of the advices I actually wanted to say. Yes, fintech, to me, they are more like a partner, because as a microfinance bank, we all have the opportunity to also innovate by way of embracing technology. I was reading something about Money Point some time ago in terms of the business or the turnover they have generated via POS. It was amazing. So the question is to say that how can you upscale? How can you increase your market share using technology to drive the business? Thank you.
Thank you very much. When are you going to become a PLC? Is there a strategy?
It's already on the table.
On the table.
It's already on the table.
I'm a prophet.
I thought you want me to talk about fintech.
Yes.
All right. Thank you very much. You see, fintech, Mrs. Odiri, or Dr. Odiri talked about growth. If you really want to talk about growth, you need to take the issue of fintech serious, because you must grow and grow efficiently. Yes, of course, the number one factor in growth should be niche. Because even this fintech we are talking about, they came up with their niche. They used this electronic transfers and all of that to penetrate the market. Then after that, they started breaking into others. Companies like Money Point, having done so well in the area of money transfer now, they now have access to information, statements of people that are already using their POS, and from there they can even go and give credit without any collateral, because they already have a lot of information. So fintech is something that could be a competitor if you close your eyes very well, that will swallow you up in the near future. But if you open your eyes very wide, you must come up with a plan to have strategic partnership. Is it partnership? We've seen a fintech company buying microfinance bank. We've seen some going to partnership, but we have not really seen MFB buying fintech. Although they have their own idiosyncrasies, they are always very fast. They are always unstable. They want to make their money very quickly. So fintech is a monster in the room that you need to really deal with if you really want to grow efficiently in the near future. You can't do without it. You must have a strategy that will work. And the biggest mistake any microfinance bank will make is to embrace it too late. You will just find yourself that you are already thrown out of the business in the future.
Thank you very much.
Yes.
Dr. Tope, the biggest mistake is to embrace it too late. We're going to take a final question as the coordinator, the MC, comes up. And this is it really. If you look at the microfinance sector, okay, 8%, 90% of the 800 are made up of unit microfinance banks. Only 10% are state and national. Even though that 10% controls 60% of the market. But when you look at the units and you talk about capitalization, they are not usually an attractive bride because you are already geofenced by the central bank regulation that you can only operate in a small area. And when you begin to look at your small area, there's so much prosperity you can make from operating within a small area. So, are we scared for the unit microfinance bank? What can they do to grow when your geographical space is already limited by the license you have? And even in technology, CBN is using microscope to see whether they're downloading your app from Lagos in Ibadan. So what's the suggestion of the panelists, one after the other, as we round up, for the unit microfinance bank? Will you be looking at merger? Will you be looking at them throwing up their license? And how does this challenge the financial inclusion mandate that we have? Anybody can start.
Okay. Thank you. For me, two things that could be embraced by Unit Microfinance Bank. One, you can grow organically. And once you are able to grow to a certain level, of course, Dr. Akiwumi said something that, okay, you have grown your balance sheet to a certain position. You can embrace equity market by way of raising money. And once the money come in, like my brother has actually said, you have a bigger vision and you can now even expand by way of dropping the license of Unit Microfinance Bank and embrace that of state, which can also make you to do bigger business. The other one, in my own suggestion, you could also embrace technology. Yes, even though if you have the fund and you don't have the required technology to drive that business, you will not still be there. So with this, and assessing capital market, sometimes it's not rocket science, like has been said in this room. Once you are able to operate for about 3 years, minimum of 3 years or 5 years, the market is open for you to get listed. Thank you.
Okay. For Unit Microfinance Bank, you use a word that should we be scared, about them and what's going to be their fate. For me, the most important thing is that while you are still small, you must hold on to a niche that you can use to survive. Maybe that niche is just some people that are close to you. You must do what OP will not be able to do for them. Even if what the bigger one, because what the bigger one will not be able to do for them. So you get their loyalty. Then come up with a time frame between 2 to 3 years, how you are going to move out of that limit. Of course, fintech is very important. Fintech is the biggest way an institution, can scale up, especially a microfinance bank. You must have a fintech strategy that will enable you to be able to scale up whatever you are doing. Of course, you must be able to manage the cost of going to fintech. We also know MFB that jumped too fast into a lot of partnership that eroded their shareholders' fund when they have not even made enough money. You must not be too early, and too late is the most dangerous thing that I said. So you must grow with a niche. Of course, nothing beats discipline, consistency, good customer service on day-to-day basis. With that, you'll be able to build out a profile before you begin to expand from where you are.
Thank you, Dr.
Thank you very much.
Do you want to respond on your last word?
Okay, so I want to say, so I don't repeat what others have said. There will always be a unit. There will always be unit MFB. We cannot eliminate that. The problem is we have too many of them. And so what the regulator is trying to do, in pushing capital up is to ensure that they can reduce the number of people staying as MFB. And so to a large extent, if we have so many unit MFB, it's a risk to the industry. it is not a capital problem that they have. It's a growth mindset problem. A lot of the time they are already comfortable with that niche and staying. As long as it's profitable, you can feed the family and a few, they are comfortable. But I think that the biggest risk that the industry will continue to face is when the percentage of unit is so large. And so that's the essence of this capital forum that we are having, to say that capital can help you to grow. We can work with you to develop a growth plan, that can attract that capital. So it's not a capital problem that they have. It's really a growth mindset. And so the industry needs to take that seriously. Thank you.
Thank you. Doctor, take it from the merger mindset. So, Crowley.
So I think it's part of my notes. I think for really MFB, it's a combination. Either you're looking from a combination is just the merger, right? 2 companies, 3 companies, 3 entities coming together to be one. You have talked about the limitation around what their license permits them to do. And I think that a bit more has to go into the thinking for units MFB. You can't look at them just like, because they're within a geographical region, right? So there are stakeholders that need to be engaged in how do you also support and facilitate in meeting that financial inclusion bit, whilst also ensuring that they're profitable, right? Because at the end of the day, underlying all of this, you must be profitable to be able to scale and remain in business. And there needs to be that support from stakeholders. The regulators is the key part, but the players themselves must be able to know what is required for us to be able to start coming together, start merging, start either you're merging A and B coming together to become C, or B acquiring A, right? And there's a whole play around that. I think platforms like this also have a role to play in communicating that, because we started this session with some statements around everybody wants to be the owner of his own entity. So perhaps you want to be able to show people that I have a 1% of a larger entity is better than just being 100% of an entity that is not going anywhere. Right? I think that's the real point there. And then, but there's need for support in helping the unit MFBs to get to that state. I think from a sector perspective, there's a view to look at it from the sector perspective. Yeah, the big players there must be some way to ensure that, because you need to look at the space in totality, right? You talked about the fact that the 10% or thereabouts control the 60% of the market, right? There's a sector look. We have to look at it from a holistic perspective. I won't sit here and tell you that in 5 minutes I think I can dimension it here, but there's a need to look at it, look at that space, especially in maybe. But clearly combinations is part of the cocktail of what needs to be done there. Thank you.
Thank you so much. And with that, we come to the end of this panelist session. We're going to take question and answers, and people have listened with rapt attention, and the credit is actually to you, so please clap for yourself. Thank you so much for indulging us and our bad English sometimes, and you've just done very well. It's time for question and answers, and we'll hand over to Dr. Est. Everybody from United Capital is a doctor, so so it's okay to say doctor. Maybe she has not. Oh, you are not from United. You are denying them. I'm from UC. You are from NAMBLAC. Everybody there is a doctor. The chief economist is a professor. And we also have United Capital Business School.
Yeah.
And they will all be lecturers.
Yes. All right. Thank
So
you.
let's put our hands together for the panelists. You guys wow, you did a great job.
Very wonderful session. Thank you so much, sir. Dr. TJ of the Most High. All right. Thank you very much, panelists. I didn't want to take photos, session. Just the panelists will take pictures while we wait for questions from the audience. Yeah. Questions. I will be surprised if there are no questions. All right, Chairman Namla, please join them. And Dr. Val. Thank you. Our emeritus chairman. Everybody's in blue.
I hope you permit me because I'm the only.
That's why you are the emeritus, you know. Dr. Odiri, you are doing well. All right, thank you. So time for questions, please. Questions. Oh, okay. Let me balance the gender. All right, thank you. Questions, please. Panelists, please still have your seats so that we can take the questions. Okay. Some numbering, yeah. Okay. Dr. Omojua. 1. Dr. Val, 2. All right, 3. There are a lot of questions. Okay. Chairman, you'll be the last person. Sorry, sir. Okay, 4. All right, so Chairman will be the number 5.
Okay, my name is Tomi Omojua. I'm not yet a doctor. I'll soon be one. So my question is to Dr. Odiri. When you were making your presentation, you mentioned the issue of asset-based loans. And you said 6 months, subject to rollover. I'm wondering, for a microfinance bank, if you really want to help us, 6 months is too short. I don't know what UAC Capital is doing to see that even if you want
United Capital, sir.
Sorry, United Capital, sorry. So that at least you give us opportunity to take loan for 12 months. So that we can be able to take advantage, on a latter note, no UAC Capital is supposed to be gender.
United Capital, sir.
United Capital is supposed to be gender balance. But look at your board of directors. So many male, very few female. What happened? Thank you.
All right, number 2. Okay, Dr. Val. No, here. Oh, okay. Please go ahead.
Everyone. My name is Disuko Forola.
From
Digidvance Microfinance Bank. So the question is, for a new microfinance bank, barely a year old, is there any plan, do you have any plan for, if we are coming to the market to maybe raise fund, or we want something, equity and debt, or any, is there any plan? Because we don't really have an audited account. It has not been vetted by the CBN. So we are just a year old. Is there anything that can, take care of us? Do you have any plan for us?
All right. Number 3, Dr. Val.
Thank you, the moderator. Thank you, the panelist. Mine is actually not a question, just a brief comment. Something I've noticed over time is a very good product like this. If you are showcasing it in the industry, first, let me thank United Capital, the makers. Yeah, let me put it half here. Next time, for my chairman, if it is possible, let it be a forum for the chairman of the board and also the MD. Because no matter how I am going back to my board and I'm going to present like Dr. Odiri to get a convention. And the moment a chairman is in our midst here and get convinced, I can tell you that you will have a buy-in in the next 24 hours. So most times it's important that when my colleagues in now sees the important, what we are going to benefit coming here, which of course today I think I've benefited a lot, although I've been dealing with UBA Capital for a very, very long time when I was still in FCMB as a treasurer. So I know them, and I know them that when they say they want to do anything with you, when they say they want to do anything with you, they mean their word. So I'm not selling UBA Capital.
You can sell, sir. You can sell. We are around to sell.
I know them, so I can see Bawo here. Bawo, of course. So what I'm saying is that please, if it is possible, NAMBLAC chairman, if it is possible that we can still have, maybe it might be a smaller one or another forum where our chairmen, it will be a breakfast for chairmen and MDs of Microfinance Bank. So that's just my comment.
Thank you, sir. Number 5. Okay. All right.
My name is Austin Iferobo, and I'm the MD of Think Finance Microfinance Bank. First, I would like to appreciate United Capital and the panelists. They've really done a good job concerning capital raising. Basically, my observation is just around pricing, because listening to the first presenter before the panelists section, that Dr. Ayodele, so the chief economist, nobody has actually talked about pricing in microfinance bank, in fact, in terms of our risk, in terms of our interest rate, because if you don't talk about pricing and we're just looking at capital alone, if you don't get that right, that capital can just be crystallized in a jiffy. Now, looking at the trend of interest rates in microfinance bank, I found out that when microfinance bank first started, interest rates was around, some were charging 8.5, even before the influx of fintech. But now, and then the risk then was sort of like lower compared to what we have now. Because basically, now the risk in the country has really gone high. Whether you're looking at company, you're looking at individual household, now you have so many family, even middle class, completely almost eradicated, disposable income. In fact, even the churches are even experiencing it, offering is dropping. And, but the interest rate the microfinance bank are charging, aside from the fintech, it's coming down, averaging around 4%. And the COVID meeting we had last year in November, you found out that non-performing loan was around 23%. So I really want us to look at that very well. How can risk be priced properly? Looking at in anticipation of the capital you are trying to raise, considering the risk profile of the environment where we are now, because everybody is projecting, including the chief economics, that interest rate is going to come down. So how can risk be priced properly in our industries? Thank you.
All right, thank you. So there's an opportunity for one more person to ask before Dr. Agbemami asks his question, since we have 2 comments. All right, sir.
Thank you very much. My name is Dr. Adewumi, the MD of Infinity Microfinance.
Yeah, give him a round. That's the MD of the almighty Infinity.
So it's not a question, but just for knowledge sharing. Beyond your rating report, there is a legal opinion. If you are going to the money market, I could see that none of the panelists mentioned that. There's also your auditor to prepare what is called reporting. Your reporting accountant should write a report on the document you are presenting to your, maybe issuer, you are the issuer, then the organization that's going to the market on your behalf, which United Capital is representing here today, you still give them that report. But most importantly, is no objection letter from Central Bank of Nigeria. Thank you.
Thank you very much for your contribution, sir. Dr. Adegbami, you have the floor.
All right. Thank you very much, and thank you to the panelists. What I have is a combination of comments and question. The question will come last. For the comments, I think what I also want my colleagues to go with from here is that growth itself is a mindset. I can say that whether you have unit license, you have state license, you have national license, unit license doesn't limit you. What we have seen, these fintechs that CBN compared to become national, some of them were running tier 2 unit license, and they were doing what they are doing. So I think part of what we need to pick here, that growth itself is a mindset, it's a philosophy, and we should get into it so it will affect every other thing that we have been talking about here. Now, the second thing is that internally, part of what we have established is that if you are a regulated entity by CBN and you are meeting CBN requirements in terms of reporting, transparency, governance, I can tell you, you are very close to what you need to be in the capital market. So this is to encourage us that we are not far from it if we are already doing what the CBN asks us to do. Now, as the executive, we have taken note of what our former president said, Dr. Va. We see whether that is possible to have a larger group that will include other stakeholders. But I also think that as individual banks, people can invite United Capital to their board retreat. I believe they will gladly.
That's an open ticket for United Capital. Thank you very much, sir.
And I believe that they will, it's going to be win-win for the both parties.
Yeah.
So our people can think along that line. The last one, which is the question, is that we have seen companies who have been in the capital market for decades and they are delisting. Now, all we are seeing today is inviting us to the capital markets, either in the form of debt or equity. Can you balance the two? Why some people are running away from capital market? You are asking us to come. Can you tell us why we should not be afraid and we should come? Thank you.
Thank you very much. And except for the specific question to Dr. Odiri, which I'll ask her to go first, any of us can then move to answer the other questions. On the issue of the pricing, I can easily tell you that Axiom Microfinance Bank raised a CP last year, the first series. It was oversubscribed, and the pricing was much cheaper than what we were borrowing from the commercial bank. So you can be sure that the pricing reflects market's reality plus a risk-free premium. Now, you will likely, whether you're doing a CPA bond, you're likely going to get something cheaper than what you get from a commercial bank. That I can guarantee.
Okay.
All right. Thank you very much for that question. So we said 6 months, but we can always negotiate up to 12 months. So it's not that it cannot be done. It can be done. And then the gender balance board, trust me, we are working on it. And the first chairman of our board is a female. So we started with a female, but now we're trying to ensure that we have more of them on the board. So be rest assured that the next time we hold this session, you can hold us accountable to that.
Is it not an overly raised assumption that because they're seeing the picture of male, then they are male? Go ahead and answer the other questions. Thank you.
All right, sorry. Let me just add to.
I didn't say that. I was just like, I was musing. I mean, I can choose to dress like a female, and I may choose to want to be represented as a child. So I'm just saying that assumptions can be flawed.
Sorry, I just want to add on the pricing. The chief economist said interest rates are going down, which is also a good time, to tap into the market. In 2020, when interest rates were very low, we had people coming to do, even United Capital issued a CPR, 1.5%. Yeah. So the timing is very critical. So don't sit too long on this decision. That's the point. Thank you.
Okay, still on the issue of pricing, I think Mr. Jordan addressed one part of the pricing, which is the price at which you raise fund. But it seems as if the gentleman that asked the question is also interested in the pricing of our loans in the market, and I want to comment on that there are a lot of things that goes into pricing of our loans in the market, but overall, it's a force of demand and supply. It's a force of competition, Of course, like you said, loans have been priced as high as 8% per month, sometimes 5% per month, sometimes even 3% or 2 point something per month. So it's just nobody's going to force you to give out a loan at a particular interest rate. It is the one that you think is good enough for you based on how much money you want to push out. So the market is going to adjust itself. For those that price their loan too low, they are going to erode their profits at the end of the day, erode their shareholders' value, and they'll be forced to increase it. For those that put their price too high, at the end of the day, they will lose some customers. So, and again, if you also step out of Lagos State, where competition reduces, you might say that you can get away with higher price. So these are all market dynamics that nobody can really do anything about. But at the end of the day, pricing is not controlled. It is each bank that is going to put together what they can offer. Of course, pricing is one of the many P's of marketing. So it's the organization that is going to decide what you want to do and run with it. Thank you.
All right. And please, let's focus on other questions too. Yes. So if you can still answer on other questions. Yeah. And there's a particular one. Where's the chief economist? Where's it gone to?
I think he went for.
Oh, okay. So there's a particular one about people exiting that I know that it's not just because I think you. All right. Okay. Let's do this. Then we'll go to you.
I want to say,
okay, go ahead.
Okay. Concerning the question raised by the chairman of NAMLAC, exiting stock exchange, to me, is an internal policy taken by some of these companies. I don't think it's as a result of their inability to perform or whatever. And sometimes there are some of these companies that have actually exited. You will find them on NASD platform. So, if somebody or an organization has been listed on the stock exchange, that does not mean such organization cannot exit tomorrow. However, it all depends on the value you are receiving having been a listed company on the stock exchange. It gives you visibility. You can easily raise money via rights issue, via IPO. All lot of advantages are there for companies that are listed on the stock exchange. On the issue of pricing, judging by our own policy, sometimes your ability to raise cheaper funds will also determine the rate at which you give it out. And of course, when you are lending, you also have to consider the sector.
We're out of time, so you need to.
The risk profile, okay. Sorry?
I said just summarize, you're out of time.
Okay, that is my comment regarding.
Thank you.
Thank you.
Okay. I think there was a question.
Remember other questions.
No.
There was a question from someone around a 1-year-old microfinance bank.
Yeah.
Right? So I think generally the way we work is we look at every business. Of course, to be able to access stock exchange and all that, NGX listing, you need 2-3 years listing depending on the growth on the board, right? The growth board needs, I think, 2 years. Main board is about 3 years. But generally, you want to be able to have at least 3 to 5 years operational track record. Now, remember, that doesn't mean you can't still attract investors. That doesn't mean you can't still attract funding. There's a private market, and we're able to work with players in that regard. There's a lot of work that goes into, and now, generally speaking, right, there's a lot of work that goes into preparing to access the markets, be it the CP market, be it the bond market, or the equities market, which is the NGX as the case is here. But what we've found out to be useful is start early. What we generally advise clients is get to the point where you make a go, no go decision. At that time, you're already ready. And you're also timing the market. So, for example, now, is it a good time to go to the market? If you're a listed company, for example, is it a good time for you to go and raise more equity? I think the answer is yes, because your shares are worth more, right? The secondary market is already up, right? As an issuer, is it a good time for you to raise debt? I think a lot of the economists and a lot of panelists have also spoken about it to say rates are coming down. A number of players have been on the sidelines watching rates for the past 6-7 months, right? And it's true to prediction, all that is playing out. Inflation is also trending down, so we expect rates to continue to go down as well. I think that's what is, you need to prepare. We say generally it will take you about 3 to 4 months, subject to a lot of things being ready. Because if you're starting from ground zero, your documentation, all the parties you need to bring together, and your investment bank, in this case, United Capital, will be willing to work with you and bring other parties together, right? The first issuance normally takes a bit of time. The first issuance sometimes is a bit more expensive because you're new to the market. Now, you're also going to do, there's something I need to mention. You need to do things we call roadshows, investor roadshows. We need to prepare you to tell your story. You're not going to say anything that is not true, but there's a way you tell your story. We know you've been having discussions with other partners in the market generally, right? But this is something that is perhaps common across all the things you're going to do. You're going to tell your story in a manner that speaks to investors. Sometimes some companies are not able to sell their story or sell themselves well. They're doing well, but they're not able to communicate their story. The philosophy we look at is that every time you raise capital, you're not only raising capital for the investors that are coming in that capital raise, you're also sending a message to the market for the next round. It must be easier for you to raise the next layer of capital. At every point in time, you must be able to unlock. So as you're raising this one, again, investors are also looking at your prior capital raises. They're looking at your performances. Your performance history from an operational perspective. But they're also looking at how are investors responding to you when you come to raise capital. That's why readiness is important. You need to work with advisors and consultants to make sure that whenever you go to the market, you get it right. When you hear things like oversubscription, right? That's the thing you want to achieve. And this is something we look at whether we are working for government, large companies, mid-sized companies. Is important. Sometimes you even say, I need 2 billion. Let me come to the market for 1 billion. If I come to the market for 1 billion and I get 2 billion, it is said to be an oversubscription, right? But remember, it's 2 billion you wanted. Nobody really knew. And you take it on, subject to the market in which you are in. I think summarily, preparation is key. Get your advisors on board. We're willing to work with you. Thank you very much.
Thank you very much. It's a knowledge and experience sharing session, and I'd like to call a subject matter expert, the MD of Trustee, another doctor.
Thank you so much. And thank you for a lot of Answers have been provided to question. I want to tell anybody in the capital market, this is the best place to be at a moment like this. And I thank you for accommodating this. This is not just a comment, but this is more like a question, right? How well are the microfinance banker exploring the national collateral registry, right? We understand that under the CBN guideline, depending on your credit policies, you can actually allow for collaterals, which actually also enables to curtail risk and also to better your non-performing loan portfolio generally. You know, is this a concept that is very exploited? I've served on the board of Lagos Techstar over the years, and I noticed that most of the fintech, which a lot of people are not aware, have actually leveraged the role of trustees in helping with securitization, such that they can do a whole lot much more. So I don't know what your regular practice is. Is this something that you consider? Is this something you do regularly? How do you do this? Is this a conversation that we should have much more of? And I don't know if anyone has actually touched on this basic thing also. If a little light is shed with a few minutes left, really appreciate that. Thank you.
That's an open door. Basically, this is like you can actually unlock your assets to liquidity by talking to the trustees. They look at the whole gamut of your business, and in your head, you're thinking everybody will be asking for property, but they are telling you there's a lot more you're sitting on that can become a backup for the liquidity you're trying to raise in the market. That's what Mr. Michael is telling us. And thank you for flattering me, thanking me for allowing you to speak. After paying for this whole thing, I am flattered. So thank you, everyone. Is there any question that has not been answered? None. Are we good for lunch? Not now. Okay. Can we put our hands together for this amazing panelists as they make their way back to their seats? Thank you.
All right. Thank you very much, panelists, and the honorable moderator, Mr. Taiwo Joda. Thank you so much. I want to emphasize that, Mr. Michael Abiodun Thomas spoke about the trustees and the national. We all know that we are supposed to have our loans on the National Collateral Registry. And I can say that the only thing we do as microfinance banks is to drop, you book the loan, you just go and keep the collateral on NCR and you charge your customer maybe 500 naira for it. But what he's saying is that there is more that we can do with that collateral, and some of us are benefiting from it already. So you can reach out to United Capital trustees to help us see how we can, especially for those of us who do large ticket transactions, where your customers have their CFO and all that. So you can speak to United Capital trustees. Okay. The next on the agenda is supposed to be the key takeaways, but I love my chairman. He has taken the key takeaways when he was making his comments, and I'm sure we have taken that down. And right about now, I would like to invite upstage before we go for lunch, the United Capital, MD of United Capital Securities in person. Don't mind me. He's not a doctor. Everybody in United Capital is not a doctor yet. All of us are still going that route anyway. Okay, so the MD of United Capital Securities, in person of Mr. Bawo Orished-Jafo, please indulge us as we. So Mr. Bawo Orished-Jafo will be coming up stage to also, say thank you to the National Association of Microfinance Banks and all the microfinance bank MDs that are represented here today. Just to say we are grateful for giving us the opportunity to share some of our offerings with you. And please permit me to also say that there was a silent communication that the chief economist made that in our prudential guidelines, microfinance banks are permitted to use 7.5% of our shareholders' funds and play in the equity markets. I will tell you free. This is an opportunity to earn free income outside your, interest income. It's an opportunity to also make small money, for the bank in the equities market. And so, Mr. Bawo Rishejafor, he's the one sitting on that portfolio for United Capital, and is going to be coming to say thank you on behalf of United Capital to everyone that has been, listening. And I want to also say thank you. It was, the attention that we paid to every session was very amazing. So Mr. Bawo Rishejafor, you have the floor. Thank you. MD CEO, United Capital Securities.
Thank you, Esther. Good afternoon, everyone. I'm sure you all want to agree with me that you guys, we have all had a very wonderful session in the last 2 hours. And I think if there are two takeaways in terms of words from what we have heard is discipline, governance, and growth mindset. Please, can we give the panelists a big round of applause for the wonderful job they've done? So thank you. As we bring this session to an end, I want to, on behalf of the United Capital Group, to thank the National Association of Microfinance Banks for the strong partnership and bringing everyone together for this session. What stands out from the session today is that the future of the MFBs in Nigeria will be shaped by technology. And also, I'm sure all of us at this session today, we are aware of the evolving landscape and both regulatory and market that is going to be faced by the MFBs. And of course, the response to this landscape is also been highlighted during the session as well. Today's dialogue has been both timely and necessary. The insights shows that the MFB sector is not only aware of the evolving regulatory and market landscape, but it's also prepared to respond with intention, structure, and collaboration. What stands out clearly is that the future of the MFBs is going to be shaped by foresight, disciplined governance, which will lead to access to sustainable finance, and then stronger institutional framework. And all these things were spoken in depth by the panelists who have just left us. We are grateful to every stakeholder that has contributed to this session. We appreciate their contributions, meanings to the contributions as well. At United Capital, we are open for business. We are ready to do business with you, and we are ready to work with FMBs to partner and grow together. We stand ready to partner, structure solutions, and show them market opportunities and support the growth of the microfinance banks. Very soon, please, you will see us coming to knock at your doors. So please be kind to listen to us, give us attention. We just want to impact on your business and to ensure that you delight your stakeholders. Thank you all for your engagement and your leadership and your continued commitment to building a stronger, more sustainable microfinance ecosystem. Thank you.
All right. Thank you very much, Mr. Bawo Rishejafor. Please indulge us. We will go for lunch, but we want to have a more organized photograph. Memories are beautiful. We want to keep those memories. Don't forget, this program is streamed live on the United Capital YouTube page. And so we also want to keep memories so that each one of us can have, some of those pictures. So I'll write at this moment, I want to call up stage the Chairman Namlag, to take a photo session with all United Capital CEOs. Please, you can give us light music. The room is too dull, please. Okay. United Capital CEOs, United Capital executives, please come up stage. And the chairman, National Association Micro, please come. Ladies first. My chairman is a gentleman. CEOs only, okay? Oh, yeah. Yeah, chairman.
We're all smiling. We're all smiling.
Thank you. All right. United Capital executives in the room with the chairman, please. While NAMBLAG executives join after this, please.
Yes, this one.
All right, NAMBLAG executives, please. With United Capital executives. Yes, please. Dr. Val, please join them.
Sorry, can we have 2 rows? Yes. All right. So can you be at the back so that we have 2 rows? Thank you. Thank you so much.
Mr. Jordan, you can come forward.
Your hair will show down.
Okay.
Sorry, we were struggling to see you. Can you move behind on this side?
Yeah, so.
Okay.
Maybe. I'm the secretary.
Good afternoon, everybody. Good afternoon, everybody. Good afternoon, everybody. Well, the way you answer will determine the size of lunch that you will eat. Good afternoon, everybody. Anybody that doesn't answer here will not eat lunch. Good afternoon, everybody. Now, please, we want to, on behalf of the association, thank each and every one of us. I think it's been a successful program. So we thank all our executives that are here, are members of the ESCO of NAMLAG. But there's a particular announcement I need to make, which I want us to listen to. Can we hear me? Can we hear me? Okay, can anybody give me an idea of how much it cost us to host this program? An idea of how much do you think it cost us to host this program? Because this is Ikeja, this is GRA, and this is Providence Hotel, and this is Lagos. Do you have an idea? Okay. My chairman said 15 million. Somebody said 5 million. I'm not sure any of us got it right. Now, but the announcement is that, and please listen very well. They said that your net worth is determined by your network. It's always good to have a good partner. If you have a good partner, life is going to be easy for you. Is that not? So we found a good partner in United Capital Group. I want to tell you that for the first time, this program is sponsored 101% by United Capital Group. We didn't take a dime from the association purse. I think I'm right. So please, once again, clap for United Capital Group. And I want to encourage our members, as much as possible, try to work with them. Because I've also tried to find out individually from some of our members that have relationship with them. They have told me that United Capital, they are partners that you should work with. Please, let's try to take advantage of this opportunity. I also want to, while I appreciate all my executive team, let me actually appreciate our General Secretary, Mrs. Esther Adeola Balogun, who is also a member of United Capital Group. I think she has made it possible. Because if Esther has not represented us very well in their group, the group will not be willing and be eager to partner with us. So please, let's appreciate Madam Esther. And finally, I want to say that United Capital Group partnership and sponsorship is not going to end here. We are going to do more. So through Esther, we also reach you. And myself, I will also reach you. So thank you everybody for your patience. And please take the food because it has been paid for. Don't let it waste. The food has been paid for. Thank you. God bless you. Please, the food is at the... Go by queue.